Welcome everyone to Startup Summit 2020. I hope everyone is staying safe and fine amidst this pandemic situation across the globe. And that is exactly also why we are all meeting online. Like I was saying a little while before, uh, we generally do a grand event, invite all of you to our office, spend 24 hours and all that. But let's live with this time and make best of it. So quickly, this is our fourth edition of startup event. First couple of years we did startup pitch where we had invited a few startups who presented their ideas, concepts, financials, and I'm happy to say some of them actually have taken some great wins and they're doing very well. Last year, we actually did a 24 hours boot camp, startup boot camp. Steve Forte of Fresco Capital, who is our great friend of Pune, always flies from San Francisco to meet all the startups here. And then last year we had a special guest from Tokyo called Eriko. She flew from Tokyo, and they both conducted a 24 hours boot camp, right? So I'm so sorry, there's some disturbance here. Okay. They conducted a 24 hours boot camp, and a lot of startups joined us in that as well. This year, however, we felt that we have to meet online. We also realized that there are a lot of things that are happening generally around us, and we should be bringing some special guests today to talk to all of you. First, before I get into that, let me introduce the hosts of the day, Stephen Forte, and Girish, who is me. We're going to talk to you and host the event for next couple of hours. Steve is managing partner at Fresco Capital. Steve is great friend of Pune. Steve is great friend of startups in India and has done a lot of good for us here. He himself is a serial entrepreneur. He was a chief strategy officer of Telerik, and he has founded multiple companies as a serial entrepreneur. Right now, he's working as managing partner of Fresco Capital based out of Menlo Park. Steve, are you here? I know you're awake, but I'm not sure whether you're here right now because it should be middle of the midnight or sometime for Steve. He should be making his coffee and joining us soon. Steve also is an avid mountain climber. He aspires to be on Mount Everest soon. So I'm going to talk about it when he is with us. Quickly, and I'm Girish, I'm Chief Evangelist at e-Zest. I'm very passionate about startups and how they operate in their own ecosystem. And e-Zest as a company is very, very, very passionate about working closely with startups. That's why we've been engaged with startups around us for many years now. So coming back, last many years, we have seen transformations in areas like cloud computing, data engineering, AI in multiple areas, modern and smart manufacturing, including the 3D printing kind of activities, right? And offshoring, not just the offshoring, the traditional offshoring, but using multi-shore manufacturing and software development destinations. And finally, what we also saw is a lot of capital getting available to startups all across the globe, so which I call as decentralization of the capital. While a lot of things are encouraging for all of us, we also saw 75% of the startups do fail in their own nascent stage, possibly because the lack of market focus, lack of understanding of business, and how to navigate in the business environment, and perhaps lack of support and mentorship from the ecosystem. So looking at all these things, we felt this year we should have a forum and a platform where we invite our guests who can come and talk to the community on the ecosystem, the accelerators, incubators, their roles. We also have seen corporate incubators and innovation activities going on at a very peak this time. Secondly, we also wanted some founders and investors from Bay Area who want to invest in India. So we kind of have brought together a list of great guests here with us, and we're going to start the session with Keynote. So that's my agenda today. Uh, we will get into Keynote quickly, and then we will have an investor panel, a few minutes logistics break, and then we'll get into co-founder panel discussion. And we'll see how it goes. We all are doing this for the first time on in online environment. There are a lot of facilities to raise your hand, ask questions. Please go ahead and do that, and we'll be watching all of that. All right, so here is our keynote speaker of the day. Ameya Mashelkar is a very well known in the startup ecosystem. He heads the Geo Gen Next, which is Reliance Industry Limited and Geo Startups mentoring program. I'm sure with the might and with focus on innovation, this is going to be one of the largest such program in the country sooner. Ameya heads that forum. He is economics graduate from Delhi University and he holds MBA from Asian Institute of Management in Manila. Best part of Ameya, he has seen both the sides of the table. He has been in corporate business development roles for many years. In last 5 odd years, he has been instrumental in mentoring many startups, technology startups specifically, helping them in writing their business model, taking it to the market, helping them with commercial partnerships and fundraising, right? So we have such a guest today to talk to us on his own topic. When I asked him, he said, this is what he's going to talk today on 5 tenets of startups for startups working with corporate accelerators and innovation programs. He's going to give us some tips. And in the middle of it, when I was interacting with many startups around us, I realized that they asked me some questions that I want them to ask to Ameya. So maybe in the middle of session, I'll raise my hand with those questions as well. With this, I think I'll ask Ameya now to take over and start with his keynote.
Thanks, Girish and Steve, for inviting me here and organizing this fantastic forum. Very pleased to be here with all of you, and thanks so much for inviting me. I actually, when I spoke to Girish first, I told him that I will talk about the 5 tenets that are important for startups when they look at accelerator programs like ours. But I've expanded those 5 tenets into 10 tenets now, since I have about 45 to 50 minutes, and I wanted to get into every point in sufficient detail so that it gives you a good understanding and a view of how corporates like Reliance Industries and Geo are doing this, and what is the purpose behind it. How can one get the most benefits out of a program like this, and how does one go about engaging with large enterprises. So that's really the focus of my talk. um, so a very recent phenomenon, as Girish was explaining earlier, is that apart from the academic incubators that are there, and even the Atal Innovation Mission incubators that are there across the country, several large enterprises and corporations have started their own programs to facilitate commercial partnerships and strategic investments, between these large enterprises and startups. And so I've been running one such program over the last 6 years within Reliance. And we've come a long way. As Girish explained, that we worked with over about 150 startups, and there are a few lessons and a few takeaways. I'm going to try and articulate today, which are based on my experience of having worked with all these companies so far. So the first one, and these are 10 takeaways, you can look at them that way. The first one is, what are these programs? What are these accelerators? Accelerators are really just bridges, right? Think of a bridge where you're at point A and you need to get to point B, and you need a certain support to get to that point B. You should look at really accelerators as bridges to get to where you want to be in a large enterprise. You can and these bridges actually help you navigate a very large ecosystem efficiently, and you can get you to your goal within that large enterprise. And so, think of this as compressing discovery of about 18 to 24 months of, who are the decision makers, who are the key stakeholders within a large enterprise, who all do I need to talk to. Imagine compressing all of that discovery into a matter of weeks, and getting in front of all the key decision makers with the right value proposition just in time. Uh, so accelerators are really bridges. I think that's the first point that I'd like to make, and they really help you sort of compress the time needed to get in front of the key stakeholders within an organization. The second point that I'd like to make is, when you apply to a corporate accelerator program, make sure that you have enough cash in the bank, or you have enough runway. Either you're bootstrapped or then you've raised capital from investors. But it's very important to have enough cash in the bank before you really approach accelerators, because when you go to a large corporate accelerator, a large enterprise, the engagement is anywhere between 12 to 18 months, even after the program ends. So the program is typically for 3 to 4 months. And then after that, you will take about 12 to 18 months to actually see results from your engagement with that enterprise. So it's a very long journey. It's not like if you get into an accelerator, things are going to magically happen for you in a matter of weeks. Yes, you will be able to put your value proposition in front of the right people within a matter of weeks, but it doesn't mean that you will be able to show results in a matter of weeks. It's going to take time. It will take time to sort of show results, essentially, as a part of being in the accelerator program. So ensure that you have enough cash in the bank. Don't apply to accelerators when you have 3 to 6 months of runway left. It's a very short period, and you won't be able to achieve much, and you won't be able to actually negotiate a good contract for yourself if you're on one hand running out of money, and on the other hand trying to negotiate with a large enterprise for a premium. So that's the second tenet. Apply when you have cash in the bank and a sufficient runway. The third tenet is, do a customer pitch and not an investor pitch. Startups often make the mistake of actually going to large enterprises and their corporate accelerators and making an investor pitch. An investor pitch typically has, what is my runway left, and how much capital do I need? With that capital, what I'm going to do? How much I'm going to put into product? How much I'm going to put into marketing, etc. I think those are not the details that really customer audience is looking for. They want to understand how you're going to solve their problem, and they're not going to talk about they're not going to look at your fundability and those kind of things, right? So because they're really looking at it more from a commercial partnership point of view. So that's really the third key point. And a customer pitch has to have the problem, the solution, what differentiates you, and a very clear benchmarking exercise done with other competitors in the market, to be able to convince the customer that your solution is better than anybody else's. And I'm specifically in this context, I'm talking about B2B or a SaaS kind of a scenario where you're trying to sell to a large enterprise, right? So that's really the third key tenet, which is, don't do a customer pitch, do an investor pitch, right? The next point is, customers want to see a 100x impact by using your product, right? That's extremely important, because if you are not able to really swing for the fences, if you're not willing to think boldly, and show how you're going to achieve exponential results for that customer, it's going to be extremely difficult for them to be convinced of your value proposition, right? So whether it is improving their top line by 100x, whether it is reducing their cost by 100x, whether it is increasing their market share by 100x, whether it is accelerating their new product launch by 100x, or whether it is delighting their existing customers and therefore retaining them at a 100x level. Whatever you do in terms of your pitch, it has to be at a 100x level. So make sure that you don't settle for anything less than that, but also don't be the startup that pitches a 100x solution and then does not deliver on it. I think it's very important that you fulfill your commitment. If you're promising 100x, you have to deliver 100x, and however long it takes, you have to work with grit and determination to make sure that you see that a proof of concept through, you see that deployment through, and you show those results. So a lot of startups that we see come in and make very conservative pitches that doesn't go anywhere. Uh, a lot of startups come and sort of claim 100x, but aren't able to deliver that. So you have to be able to do both. You have to be able to pitch a 100x solution as well as be able to deliver on that. The next one that is an important one is the art of follow-up. The art of follow-up is important because nothing, especially in the Indian context, gets done overnight. Like I said earlier, I mean, the journey for the journey for a startup within a large enterprise is anywhere between 12 to 18 months to the time that they are able to show results. I think it's extremely important that you use the right tools for the right purpose. So, for example, emails have to be used not for getting decisions from decision makers, but to really follow up and also share updates on your company and on the deployment that you're doing, for the company. Emails are a very bad tool nowadays for trying to get decisions out of people. I think WhatsApp, although very personal, can be used to provide some quick updates on the startup. And typically images and videos work the best. If you have a product demo video, or if you have some kind of a customer testimonial video, those that WhatsApp is the best way to communicate those kind of things, so as to keep your customer audience interested. I also think that phone calls and video calls are extremely effective for getting decisions out of people, and those can go as long as possible. And one has to really also learn how to be brief, be able to communicate your value proposition, communicate your update as briefly as possible, because the attention spans are really reducing at an alarming rate, and nobody has time to read 500 and 1,000 word updates. You have to be able to crisply update somebody in as many words as a tweet takes. 240 characters is something that you should be able to communicate in. So that's the ace of the follow-up. I think art of the follow-up. I think that's really important in India, and without follow-up, nothing happens. And these are some of the tools and methods that you can use, especially in the context of a large enterprise, to follow up and get your things done. I just want to extend on a few things around your pitch, and go beyond just these five tenets. So the first thing is that we often see startups coming and pitching technology as opposed to pitching the end use case. So to give you an example, we had a startup that came and pitched about an augmented reality solution, saying that okay, augmented reality is going to be used for XYZ type of applications, and the benefits of augmented reality and stuff like that. I think customers are not as interested in what technology you use. I think they're sufficiently updated on what technology is emerging, but how you can use that technology to achieve the goal for them, right? And there is a big difference out there. I think startups just sometimes don't connect those dots, don't end up connecting that link, and therefore lose the customer's interest very early into a pitch. So don't pitch a technology. And we have so many startups coming nowadays and talking about AI and ML and AR and VR and blockchain and so on and so forth. I think those are just technologies, but where can that technology be effectively implemented to achieve the result for the customer is more important than the technology itself. So don't pitch a technology, pitch the end use case. The next one that I'd like to highlight is you need to be able to study your customer really well. I think a lot of startups make this mistake of getting into meetings without knowing who the person they are talking to, what is that person's background, which companies has that person worked for, and all this information is available on LinkedIn, right? For a lot of people. It gives you a lot of context in terms of uh, who that person is, and what that person's journey has been, and you can find synergies, and you can find common talking points that you can use in your pitch, which can get them interested in what you have to say. So always very important to study the customer situation and study the audience itself before going into a pitch. Just don't go into a pitch not knowing who's really in front of you. So I think customer diligence is extremely important. Also, it may even give you some insight into whether you should actually be presenting to the customer that you're approaching. In certain cases, maybe he's that person is not the right audience for what you're pitching. And if you do your research well, you'll be sufficiently prepared when you go into such meetings. So that's another takeaway for startups. Um, the other thing that I want to touch upon is pitching for solving the problem as opposed to selling a solution. And there is a big difference between the two. When you pitch to solve the problem, you're actually getting connected to the audience around the problem, and they have to be able to sense the problem before you even start talking about the solution. And I'll give you an excellent example of this that happened in our third batch at GeoGen Next. We had a startup that essentially did accounts reconciliation between an e-commerce marketplace and the seller. So you have these e-commerce marketplaces which has multiple sellers on it, through whom these marketplaces sell the products, right? And there is a bit of accounting reconciliation that happens at the end of every month or every quarter to make sure that all the money is settled in the right way. And there was a big confusion over that. And this person was so passionate about just this account reconciliation problem that when he came and he pitched to our audience in retail, and retail was a seller on a particular marketplace, it instantly kind of clicked with the audience. I mean, they instantly saw it as their own problem, and they were able to relate to it, and they understood that what he's trying to do could potentially save them a lot of money going forward. And it was unbelievable. I mean, 15 minutes into the pitch, they said, okay, I think we are convinced about the problem you're trying to solve, and also the way you're going about it. In fact, he didn't even have a software at that point. He just had a spreadsheet that he was showing in terms of how one can settle these accounts effectively. And within 15 minutes of that pitch, what I saw was incredible, where all these people in the room flocked around him and were asking him, bombarding him with questions in terms of, okay, how do I solve this? How do I solve that? And really, I mean, at that point in time, what struck me is that a founder, when is selling or when pitching a startup or a product, has to really come off as a domain expert in that area. I mean, it cannot just be that you've thought of an idea and you have no understanding of what the real world actually needs. And that really struck me, that deep domain expertise is extremely important. And they saw him as an expert who could solve that problem much before the software could actually be implemented. So the recognition of the founder to be a domain expert is extremely important, and you have to be pitching for solving the problem and not selling a solution. And by the way, these are not my words, these are his words, because I asked him later on, I asked him, why is it that I saw this scene where all these people were flocking around you after your pitch? He said that that's because I wasn't trying to sell a solution. Most startups come and start talking about the product straight away, without really explaining the problem that they're trying to solve. And that's the only difference between me and other startups, the way they go about it. And that made tremendous sense to me. So it seems very trivial and obvious, but believe me, I mean, even today, even in spite of all the learning and all the YouTube videos and everything that's available out there, startups still make this mistake. They get into presentations selling their product instead of selling the problem. So so that's the other takeaway that I have for you. Um, I think when you go to large enterprises like ours to sell or to partner, you have to do it for the right reasons. Because large corporations look at fundamentally startups very differently. I mean, they look at them um, as solutions. Of course, solutions to their problems, but also how they can get ahead in the market, and they have all the resources in the world, and startups have no resources, but they have ideas and they have innovation. So you have to go to them to really see how you can scale up, whether it is through a commercial partnership or investment, or whether it is through just access to their market through to their resources. So go to them for distribution or for scale up capital. Don't go to them for any other reason that you might have in mind, because it won't really matter to either side if you go with any other objective. Um, then I would like to say that, don't pitch anything that takes 3 to 6 months for a large enterprise to build in-house. And that's really important, because if you go with a product value proposition where you say that, okay, this is going to take only 3 months or 6 months, or if they find out that it's going to take only 3 or 6 months to build, then it's not going to be a fruitful engagement. I think they have to strongly feel that this is a 15 to 18 month journey for them, if they were to replicate what you built by themselves. And they need to have the confidence that, okay, this is something that can really help us accelerate and solve our need today. So instead of waiting, and instead of recruiting, and instead of building, I think we can just use this product and get ahead in the market. And I don't see startups working on ideas that are that hard to replicate. And that's one of the biggest problems that I feel exists today with the way startups go about building their products. So you have to really go after something very hard that cannot be replicated very easily and in a short period of time. Um, Finally, I would like to say that startups should also look at large enterprises, and through their corporate accelerator programs or even otherwise, as investors as well. I think corporates can be excellent investors in your company, because they provide you with an advantage in the market where there is a strong endorsement, there is a strong validation, there is uh, you know additional skin in the game by investing in the company, and you get access to a lot of resources that you wouldn't otherwise get if you were to just do raise a financial investment. However, I must caution you that you should go and you should raise investment from a large enterprise at the right time. uh, the best time is not when you're in a POC stage, or MVP stage, or even like a pre-product market fit stage. You should go typically when you need scale, and you need reach, and you need distribution. Those are the right reasons to go to corporates for raising capital, and that's where that capital is best utilized. So these are some lessons that I've learned over the years of having worked with different startups and engaged with them. We have over 6 years about 150 startups, and about 40 of them have entered into a commercial engagement with us at Reliance and at Geo. And they have collectively raised about $234 million from the market. And we have facilitated three strategic investments as well by the group into these startups. And I think GeoGen Next as a program, is an excellent program if you want to get a jump start to a relationship with the Reliance ecosystem. So any of you are building ideas that could, where you see synergy with Reliance or with Geo, I think you should definitely approach us, and we'll make sure that we, you know, discuss it
That
and see
that
the.
brings me to a very interesting point, Amay, because when I was introducing to you, I mentioned as well that many startups who reached out to us, they had this question for you as to how should they get into GeoGen Next specifically. and inside the Reliance ecosystem in general. Because if you see, we during the pandemic, while everything was really going negative, on every front, Reliance Industries Limited was the only ecosystem that was thriving and giving a great sense of hope in the turmoil economy. So everyone has this question as to how they can get in touch with you, how they can enter into Reliance GeoGen Next ecosystem, and also work with Reliance for that matter, because that itself could be one of the largest, greatest, and a big customer that they could work with on that idea.
Absolutely. So we have two programs. One is called Basecamp, which is a 12 weeks engagement. We are starting with our 13th batch of Basecamp in mid-January, and we've closed the applications for that particular batch, but the applications will be open again sometime late January. So I will alert you, Girish, and maybe you can share the link to the application form with the startup audience that's attending today. Um, it's a very simple form. It takes about 15 minutes to fill, and that form gives us a lot of clarity about the kind of business that you're trying to build. And what we do is that we have a team within GeoGenX. There are 6 of us, and we sort of split the applications between the 6 of us, and we go through every application in detail on merit. We do a lot of background research on every application to see the space that you're operating in, the market opportunity that you're going after, who your competition is, all of that. And then we kind of shortlist to about 50 or 60 startups. Once this shortlist is there, we do detailed interviews with founders just to understand everything that we can about the business. And we also, what we do is that because we work in a large ecosystem like Reliance, we look at fitment for your startup within our ecosystem, and we do some pre-work before we bring you up to the jury. So that pre-work involves taking your case to specific stakeholders within the company and ask, hey, what do you think about this idea? This is why we like this startup. This is where it can add value to what we're doing. And that person could be a business head, it could be a product head. And then based on their guidance, we take the next step, which is to shortlist for the jury. The jury has top decision makers from within Reliance, and we also get external jury members who are typically either venture investors or either other corporates as well. And then we finally make a selection of about 10 to 11 startups that go through a 12 weeks program with us. We have 2 such cohorts a year of 10 to 11 startups for each cohort. And we have another program called Scale, which is if you're not in the seed stage, which is from an MVP to a pre-series A stage, if you are in a series A and beyond stage, or you've bootstrapped and you're growing profitably, but you're looking at a partnership with Reliance, we also look at such companies which are slightly more mature. And we have something called Scale, where it's really a one-day pitch session across companies where we get all the key decision makers. And then we identify which are the areas in which we can engage. It could just be a commercial partnership, or it could be even a strategic investment in the company. And then we take a decision and then we move forward that way. So we have Basecamp, which is 12 weeks, which is for seed to Series A stage. And we have Scale, which is for companies that are beyond Series A stage. So these are the 2 programs, and the application is there on geogennex.com. You can apply at any point in time, and we regularly check these applications and keep shortlisting. So that's pretty much the process.
Sure, no, I think that's a great clarity. And whenever you share the link, we will ensure that through our WhatsApp group and email communication with the attendees today, we'll definitely let them know on that. I have a corollary question, because you see, Reliance is a larger than life, in not in India now, across the globe. So getting into that ecosystem and making Reliance as a customer itself could be a dream for many startups, right? So how do you help those that journey? Because some of them, some of the startups even could be a little scared to approach. So that's one. And how is I mean, you give some statistics as to a lot of startups are already engaged with Reliance, right? So maybe you can comment on that a little bit.
Yeah, actually, I can tell you some examples of when a startup came in and how we were able to help them along the journey.
Mm-hmm.
So, for example, there is a startup called Intello Labs, which has recently closed its Series B funding, and they came to us in for our winter 2017. They were in the winter 2017 cohort, and
Mm-hmm.
they were actually working on a new technology, which was new technology at that point, which is computer vision. And they were talking about how they can use computer vision to do quality assessment of commodities. And they had done a pilot project for the government of Rajasthan. And we our retail team thought that it's a very interesting idea, because we are very large uh, uh, you know buyers of fruits and vegetables for our Reliance Fresh business.
Mm-hmm.
And a lot of these fruits are, for example, expensive fruits. And if the quality goes bad early on, whether it is in our distribution center or in the retail store, then we suffer significant loss. And so we thought that this could be an interesting tech to use to keep a check at every point on the quality of the premium fruits that we buy. So we did a pilot project with them in our Reliance Fresh store in the Reliance Corporate Park campus. And at that point in time, they had like a hardware camera that was doing all the image capturing, and they were doing sort of processing of those images and giving us the output not in real time. But what we saw is that we were able to distinguish between different fruits quite well, and their technique of doing the image capture and processing was something impressive. And we said that, okay, look, if you can make this a little more easier, where if the retail store supervisor herself can actually take photographs and in real time figure out the quality of the fruits across samples, then it would be a lot more efficient and quicker. So we gave them a budget. They did a pilot with us, and they came back with a mobile based solution. And now very happy to report that it's the technology is being used in all our Reliance Fresh stores, and also in our distribution centers as well across the country. And so that was the first commercial contract that they got. And they in fact invented like a business model that worked for them through us. And once they were able to show that, then investors also were obviously impressed, saying that, okay, if you can crack Reliance as a customer, then obviously you're onto something. And why not do this for other retailers? So now they're working for a lot of the major retailers around the world, across some really high premium commodities, doing this kind of quality assessment. And they're one of the best in the business, as far as this is concerned. So you can see how this journey from just being an idea and a raw idea and a small MVP or a prototype. Uh,
Mm-hmm.
Now this company has been able to raise Series B and is now working in the global markets. And I have plenty of such examples of how startups have been able to grow as a result of this kind of intervention.
Correct. And the startups can always boost the fact that they are Reliance is one of their customers, right? That's
Yeah,
always good.
absolutely. And the first customer. That's even more special.
Yeah, that is great. Now, audience also has asked a few questions. I'll start. I'll take one of those quickly. So there is one very interesting question, a very hot one actually. Uh, because you mentioned about technology, there is a question that has come like why technology doesn't matter for startups. Any specific thoughts that you may have? It's kind of a because I think the fact that the techies come with that mindset that technology does matter, and the business actually looks for solution. Maybe that's something that you may want to comment on. Why?
Yeah, I think if I understood the question correctly, what your question is that technology does matter, right? And
That's the feeling. So the
uh,
question is why technology doesn't matter. The feeling is that technology matters. Yeah.
Yeah, so I think see there has been no great progress um, in the world, in fact, without the use of technology, right? So
Mhm.
technology does matter. I mean, that's the first principle. And we are, if you look at Geo, it's a technology company today. We have
Indeed.
gone from being a very traditional energy business to a new age, technology company with Geo. And so that transition itself will prove to you that technology matters. I think what happens with startups is that, like I had said in one of the points earlier, that technology cannot be for the sake of technology. You cannot come and tell me that AI will solve all the problems in the world. You have to look at specific use cases, like in the case of Intello Labs that I mentioned, computer vision. Where do you apply computer vision so as to derive the so as to get the desired results for the customer, right? And that linkage is mostly missing, and that's where uh, accelerators also can help you. You have to be able to link the technology to the output or the outcome that the customer is trying to figure out. And sometimes these things are not very clear in the beginning, which I feel is also right in a way, because I could just say computer vision, but how do I apply computer vision to something meaningful? That's where things start really becoming very interesting. So I would say technology is important, but you have to be able to link it to the right outcome for the customer.
I think that's just absolutely valid answer. There's one more question that says, how to service in current pandemic as a solo startup founder. We do have innovative and scalable product, but without money, we are not able to scale. So, does India have a scope for such innovations? Why don't we have entrepreneurship in our academic syllabus? So it's more of a philosophical question. I'm sure it also has come out of some kind of a frustrating environments in some cases. So, and I'm sure you already have given some advice, but I think you may want to touch upon this again.
Yeah, I think entrepreneurship is not something that can be taught in an academic setting. Entrepreneurship has to be learned by actually being an entrepreneur, by getting real world feedback all the time and continuously improving your value proposition. I think that's the only way to do it. I mean, I think the effort that academic institutions are putting into teaching innovation and entrepreneurship is commendable. But unless you can take that learning and actually become an entrepreneur, it is meaningless. So, I think that's as far as my opinion on entrepreneurship goes. Entrepreneurship in academic settings goes. I think for scale up and for capital, there is enough capital available today, even in the country, even in India today. There are lots of angel networks, angel investors, venture capital funds who are doing an excellent job in funding startups and helping them in their growth journey. I think what is missing is truly disruptive and innovative ideas. Like I talked about the 100x improvement, right? Those 100x
Mhm.
ideas are not forthcoming. What frustrates investors and also customers and corporates, etc., is that where are those breakthrough innovations? I mean, they are there, but there are very few of them. So out of 100, you will find one that is doing some really groundbreaking work. So I think if you focus your efforts on doing something that's 100x, then I think it'll be worthwhile for everybody to get involved and help you grow fast.
Great. I think that's a great answer. There's one very interesting question from Suman. The question is, will it be good if we want to talk to investor after our product is ready? And that's when we actually need money for our marketing. Uh,
Yeah, actually, the ideal answer to this is you should go into building a startup thinking that you will never need capital from an investor. To be honest, I think if I were to start a startup tomorrow, after all the learning and everything that I've seen in the ecosystem, I would really build a startup thinking going into it that I don't need investor capital. I will make money off my customer, right? And customer revenue is more important than VC revenue. However, there are startups, or there are ideas where you do need capital at a very initial stage. There is no denying that. But I think that trend is also changing. It's turning, and I think startups are getting extremely savvy about onboarding customers before they can approach investors. So I think that's the ideal path. Um, I don't think the reverse is sustainable, where you first go and raise money, then you build a product, and then you take it to market and get a customer. I think uh, that might work, but you're taking a big gamble, actually.
So ideally, one should burn their own money before getting to the next step.
Ideally, one should actually get customers to pay for your product first before
Perfect.
approaching investors.
So you mean to say, the startup should be lean, should know who their customers are, should have engaged with the customers early enough, and then they may be paid or unpaid customers to start with, honestly, but having customers onboarded matters, right? That's what you mean.
Absolutely. You should at least have a roadmap to monetization.
Okay.
That cannot look like, okay, I'm going to monetize 18 to 24 months later. Or you cannot go into a pitch to an investor saying that, I have no idea how I'm going to monetize this, but I have customers using my product, which is not a very good sign for an investor. So they need to at least see when you'll be able to convert these POCs and these pilots into paying situations for them to put money behind you.
Right. Good, great answer. I have last two questions. I'll take the first. In your five tenets, like which you made 10 now, the fifth one is the art of follow up. Okay. Any example or anything that you want to comment on? Because I think there is a inherent shyness, that one of the questions that is coming up. Inherent shyness, especially in Indian entrepreneurs or maybe globally, the techies for that matter, in following up, right, on their own business. So basically asking for business, okay, after talking about value, solution, product. So we want to give any tips on that before I conclude with my last question.
Yeah, sure. Actually, it's a really good question. And I find our entrepreneurs really very shy to update their customers, to update their investors, uh, primarily because they feel that if they've not achieved enough in that month, there is nothing to update anybody. And I think that is fundamentally the wrong approach. I think you should obviously, being a startup, you should obviously try and get non-linear growth, and therefore there should be lots to update an investor and impress an investor or impress a customer on. But I feel that even regular communication with whoever you're connected to, let's say that you're working with a corporate accelerator like ours. If you're a startup that has gone through the program, and if you don't send me like a monthly update, then I'm not sure what's going on with you, and I'm not able to position you for further conversations within our ecosystem also, right? And I feel that entrepreneurs make this mistake all the time. Either they forget, or then they just don't do it. And I think they should start doing it, so that because everything is based on relationship, and everything is based on engagement. And if you can't engage your customer or your audience, it's very difficult for us to promote you.
So one need not be a shy and be persuasive and be following up all the time. Great. No, that's awesome answer. I have one very interesting question for you, which is not the last question now because this has come up now. Uh, how to incubate a new startup without losing a job? I think where it is coming from is we have many folks around us, for that matter, who are working somewhere but still are craving for something. I read a Harvard Business School report that the most successful entrepreneurs globally are in their 40s, early 40s, for example, which means they are working somewhere and they want to work on something in startup mode, right? So, well, take the question. It's for you.
See, I'll give you basically two answers to this question. Um, the first answer is that if you want to do a startup and if you want to raise money for your startup, or if you want a customer to believe in you, they have to know that you're putting your entire life savings and your entire effort into it, right? Without which there is no belief from the other side. And I'll give you an example. Actually, there's a startup that graduated from Gen Next, and the founder of that startup actually told me once that when he was starting out, he was in a job and he went to one of his very close friends, who's a top executive in the industry, a high net worth individual, who had committed that if he starts a startup, he will back him with the first check. And so he went to him and he said that, look, finally I've come out with this great idea, and this is the idea. He made a pitch to him, and he said that I want 50 lakhs to get started with this idea, and you had told me that you can come and ask me for the first check when I'm ready with my idea. So he said that that's great. Now the next thing that you need to do is to go and submit your resignation, right? Because unless you quit and unless you resign, I won't be confident that I will get a return on my capital. I will not be confident that you will put in everything that you got into making your idea successful. So he actually did that. The next day he went and resigned, and this person actually wrote him the first check, and that's how he got started. So that's how a belief will happen. That's how people will believe you, and otherwise people will not believe you. Having said that, I do think that there is a hack to get started without really quitting your job, which
Okay.
is really started as a side project,
Mm.
right? You can start it as a side project after work hours, weekends. Get your friends sufficiently interested in building it with you, and let the side project actually evolve into a company organically. And
Okay.
most great companies have started as a side project,
Correct.
right? There are famous examples of that,
Absolutely. I think
including Facebook.
terrific answer, because this was asked by one person. I didn't want to take his name because I don't know what his status is, but this question has been repeated by many here, where they say even this is bothering me. Okay, so I think that was a good catch. I'm going to end with maybe we have a few more minutes. A very logistical question, but very, very important in my opinion. What are the parameters on the basis of which investors evaluate product based on tech startup? And you can make it a GeoGen Next specific as well, because that will be a great value for the audience.
I think from a GeoGenX point of view, my biggest feedback to startups when we interview them based on their application is, um, if I see that this has some applicability within our ecosystem, then I'm able to take it back to the right stakeholder within our ecosystem and get that person to sign off on a potential POC. I mean, that person has to tell me that, okay, look, I'm willing to do a pilot with this startup if they come into your batch. Even that level of validation is enough for me to induct a founder and a startup into the batch. And that's all that it takes, actually, nothing more than that. I think from an investor's point of view, to be honest, in India, there are, the way things go: first friends and family, then angels, then angel network, institutional venture capital. So you have to get going with friends and family capital, put together the 50-75 lakhs that you need from friends and family to get started, and then raise a larger round of funding later on. And so for your product, really, even if you don't have any traction, you can still raise a small friends and family round and get started. But you need to have, you need to be able to connect with people and convince them that this is the right idea to back. And once you've actually shown some traction, then it's a good idea to go to investors and then seek more money from them. I would
Yeah,
never go to an investor without any traction, to be honest.
I think you answered a couple of more questions in that, which actually means that find a good taker around you. If your friends believe, you can always have investors who can believe in you. That's the that's the best way to put it.
Absolutely.
Awesome. There is one more question. Hi, Ameya. Someone has said you hello. His name is Samir. And good to hear always from you. His question is B2B versus B2C always has many companies early on dabbling both, as each revenue cache is important for both of them, and one does not want to say no for the business. So, what's your take on ways in which entrepreneurs can navigate these things, whether to be in B2B, B2C, and how to go about it?
See, fundamentally, I feel that, and earlier Girish talked about, being over 40 and so on and so forth. I think B2B startups have always been started by people who have been in that industry, have seen a problem, weren't able to solve it in
Ah,
that
okay,
in
yeah.
their environment, but thought that it's a big opportunity, and their company is not doing anything about it, stepped out and built a company. I mean, that's how it's always happened in B2B, and that's how it should happen, because there is a certain amount of understanding that you have of the problem that matters in B2B. So you cannot just be fresh out of college and trying to build a B2B business. I mean, that is very rare. I can't recollect any examples of that kind. B2C, on the other hand, is because a consumer really, and you're trying to create something new for a consumer that consumer has never experienced before. And so you can be fresh out of college, or even in college, and start a B2C company and see if it clicks in the market. So I would say that for B2C, not as a rule, but in general, lesser experience the better, so that you're not influenced by what has worked and what hasn't worked. And B2B, you need to be a deep domain expert to be able to start a B2B startup. And honestly speaking, we have never inducted any entrepreneur in the B2B area without our confidence in that person being a domain expert in that field. One example I'll give you quickly is a gentleman by the name Manish Rachwani, who started a company called Headspin, and is now based out of Silicon Valley. And that company grew to like $500 million valuation. And he's a world-renowned expert in a certain area, and everybody recognizes him as a domain expert, and that's what created value for the company that he was building. And he came with that sufficient expertise.
This is a great answer. This really tells us that typical B2B startups come with industry experience. Maybe those are the mid 40s or early 40s who have spent like 10, 15 years in the industry. And there's some cool ideas like the Facebookers. They would be fresh out of school. That's awesome. We still have some more questions. Okay, I'll take one very logistical question. What is your checklist for selecting people in Reliance? I think we addressed that.
So at an initial level, we just look for three things. So one is, how good the team is. That's, building the product. Second is whether that product has a use case within our own ecosystem, and what areas we are working in and what areas in which we are looking for startups are listed on our website. So that's the second part. And the third part is, because at some point you will need to raise capital to scale, and from a fundability point of view, sometime down the line, it's also very important to understand how big the market opportunity is, for you, because we are not going to be the only customer. As an accelerator, we also want to ensure that you're building a business that's not just providing a point solution for me as one customer, but has replicability and is addressing a very large market opportunity. So I would just say that, we focus on just these three things. First is the team. Second is the product that you're building, whether it has a use case internally. And third is, how big is the market opportunity you're going after.
Great. And I'm just going to take last question because the questions are coming, but we are still running. We will be running out of time in another 2 minutes. But there's one question. Adding to job plus startup scenario, someone says we are running a startup since 2 years, along with our jobs. Basically, that's the combination. But in last 3 months, we got revenue of 2.3 lakhs with a positive cash flow every month. Is it fine traction to raise the funds? We are eager to enter into startup full time, but we'll still start. That's the answer. But they got money coming in from customers. That's what they're saying.
I think if you have money coming in from customers, you should rush to, your investors and ask them for some seed capital to whoever it could be friends and family, it could be angel networks, uh, because revenue is a very good signal for something working for you, and you should definitely go and raise capital.
Great. I think we are done with the questions as well, and there's a good line of questions too, and rightly so, because you represent one of the, and you lead and you head one of the largest upcoming, I would say, accelerator, incubator, and mentorship program in the country, with in-house potential of mentoring them to a very different level. So thank you, Ame, for your time. If you want to conclude in next 30 seconds, I would have you do that, just like any news anchor does it before we finish.
Yeah, I would just say that, if you have a great idea and you're looking for support from GeoGenNext and you think that it's a right fit for you, don't hesitate, apply to our program. Our applications will be out in January, and hopefully we get to meet each other. I think that's, I'm going to call, that's like a call to action from my side.
Great. Thank you, Ameya. You have been fantastic. This was a very engaging conversation, and I think it came from horse's mouth. You yourself were a startup entrepreneur, and for last many years, you are helping startups get a better life, right, from where they are to where they want to go. So thank you very much for coming on board here today, talking to all of us. And we all hope to see you face to face, maybe in our next year's version of this event.
Yeah, absolutely. Thank you for having me here, and hi to Steve, who's joined us now,
Mhm.
and hope you guys have a great event. Thanks
Thank you
for
so
having me.
much. You're most welcome to stay back or join after your short break. Thank you so much again. Thank you,
Okay.
Amir.
Thanks.
Yeah.
Thanks. Bye.
So thank you, and I request the audience to stay here. We will start our next section in next few minutes. Hi, Steve. How are you doing?
Doing great. Good morning. Well, good evening.
Good morning, and I hope you had a grand cup of tea or coffee. Masala chai would have been best if you were here.
Oh yes, I missed the masala chai.
All right.
But we don't do too bad over here with our mixture of teas here in Silicon Valley. You can find almost anything.
I'm sure we would. So I think I have Sonal who is working on some logistics, and we should be starting soon, maybe a minute or two.
Yeah, we can give the audience a chance to, as we like to say in Silicon Valley, a bio break. Everyone can go home tea.
Alrighty, so Sonal, if you're here, let me know when you want to start, if everything is ready. Okay, great. And we got all our, we got Raji, we got Wine, and Sunita, all of them on board. Okay. Maybe we can wait for a minute and then we get going, right? I will reintroduce you, Steve, in that meantime, because before you join, right, I was telling the audience, that Steve is an avid mountain climber. Well, he has done business, he has done startups, he has done funding to startups and all of that, which is relevant. But something that is exciting, he's a mountain climber, and his job has been made up by the government of Nepal last week by increasing the height of Mount Everest by 2 feet.
Yeah, almost a full meter. And actually the way that the tectonic plates are working, and basically the Indian subcontinent is still kind of crashing into Asia. So like, as much as India is banning TikTok and trying to get away from China politically, geographically, you're actually getting closer to China every day. So Mount Everest will actually grow a little higher in our lifetimes. Yeah, so I kind of have to go back now and visit Mount Everest again. And my Facebook feed was filled with lots of people asking me that question. And this time around, I'm going to bring my, she just turned 5, but I'm going to bring my daughter, and I'm going to bring her out probably through Namche Bazaar and some of the other Sherpa villages. So
I'm sure you will figure your way out. That is awesome. Great. So Steve, I think we have the entire panel here. You want to go start now? We got
I would
Ludwig
love to. Yeah.
and all of them on board. So you can start. I'm just running this slide saying investor panel discussion. I hope all of the audience also is back. And here are those. And Steve, your time starts now.
Okay, great. I think we've got about 50 minutes or so I'm sure we'll use that up. We've got a great panel for all of you. Thank you for joining us. Sorry I wasn't there for the entire keynote. It was a bit of an early wake-up call. I had Girish sending me messages around 3. My phone started buzzing around 3:30 in the morning here in Silicon Valley. So I think I was introduced already, so I will then start to hand it over to the moderator. My job is to facilitate a great conversation. So you can see their wonderful names and pictures on the screen, but on the right-hand side, you will have their actual live images. So I will actually ask each panelist to do a quick introduction, and then we will jump in and I'll start talking about the session. So let's start with Ludwig. Since you're first on that list, I'm gonna let you introduce yourself.
Hi, Steve. And hi, Girish. Hi to the audience. I'm Ludwig Nohel. I'm based in India since the last 14 years. And, I have founded, a company named Bridgestone in India and in Singapore. So the purpose of the company is to be an advisor and a kind of an accelerator. We, give, support to ventures to actually develop their strategy, go for fundraising, to be investor ready as well, and obviously to do the link with how to progress, in their life with investors. We are also, working very closely with investors, in that, in the other way around. And we do invest, time to time, from our, Singaporean vehicle, only in companies where we have been very hands-on into the strategy. So we know them, inside out. And we can take the decision, to invest when we have like a window shop. It's a small, venture. It's, I'm also, an entrepreneur, as well. By the way, I have a very solid, experience into capital market and investments.
Great, thank you. And my list is a little different than the list on the order, so I'll just call them on the order here on the slide. So let's start up with Rajvi.
Steve, yeah, hi. Hi, everyone. Steve and Girish, thanks for having me over. It's a pleasure to be here. My name is Rajiv. I run an early stage tech fund called Arali Ventures. We're based out of Bangalore in India. We invest into seed stage enterprise tech companies, i.e. B2B tech companies. So we do check sizes between 100K to 400K USD. We've been in business for about 2 years. We've made about 8 investments till date. Prior to this, we used to run an advisory firm called CDEX, which again used to help early stage venture raise capital. And our backgrounds are more operator-like. We have not been fund managers by background. We've spent about 16 years in the industry building companies, scaling companies in the tech and services space. After which, we came here. I would love to say that I'm also a mountain climber like Steve, but the good news, Steve, is with this 86 centimeter, at least some of us can claim that maybe that much we can do. The rest of Everest, since you have done.
That's awesome. Well, I can throw in some mountain climbing questions later. It's a long, complicated history I have with that mountain. So we can get on that at a different point. If you follow my blog over the years, I've been going there for 20 years and blogging about it. So, which has then been thus bringing me to India for both work and pleasure as well. Okay, great. Thank you for that. And before we jump into the questions, we have one last panelist, last but not least, Sunithra. And before you introduce yourself, to give you context, most of the people in the audience know me. I talk a lot. I'm very loud. So last year at this event, I lost my voice because Girish had me singing at 3 o'clock in the morning, Zingat and everything else. So the next day I fly to Bangalore, and my first meeting at 8 a.m. is with Sunitha. And my partner had to go. I couldn't talk. I sounded like this. So I probably sound and look a lot different than I did because of my COVID haircut that my wife did. So I sound and look a lot different than when we met in person last year. So I'd like to hand it over to you for your intro.
Yes, and finally good to hear your actual voice.
Yes, this is how I actually sound like, yes.
To have me over, and good evening, everyone. I think Friday evening, everybody wants to relax and have this conversation as well. Quick background, I head the early stage business of Let's Venture. Who's Let's Venture? We are an online platform for startups to raise funds. Actually, I will take a step back. We started off as an early stage platform for startups to raise funds. And so far, we've done over 320 plus transactions in the last 7 years. But we ourselves being a startup, we have grown our company, and we today have a couple of other verticals as well. One is, late stage and growth stage investments, as well as fund-to-fund investments. The other is an ESOP and cap table digitization SaaS product for startups. So what we're trying to do is, can we be there from seed to IPO stage for a startup and be there as their partner alongside through and through, right? That's who we are as Let's Venture. A couple of other things about me. I used to be with a VC before in the impact investment space. Like a typical Bangalorean, was also an engineer before I got into the finance field as well, right? And that's a quick thing. And I think while Rajiv mentioned 8 to 6 centimeters of doing mountain climbing, I think the current lockdown situations is 8 to 6 feet of walking itself is a big thing right now. With a lot of us actually have put on weight thanks to this scenario.
Good point. Very good point. Okay, so thank you for that, Sunitha. And I had the pleasure of being able to recruit this great panel, and my first question is representative of actually that. Meaning, I'm going to tell you a very brief story. About 5 years ago, a startup in Pune, at e-Zest office at one of these startup events, asked me, "Hey, is Fresco going to invest in Indian startups?" And I said, it's a little hard for us because there's this mismatch of, rounds and valuations and things. And, that was probably about 5 years ago, probably about 2015 or so. So over those 5 years, I've been coming to India a lot. I've met the three of you. I've watched your businesses grow. I've been working with e-Zest. We've made investments in a handful of Indian startups. One of them co-investments actually with Sunitha. Or introduced to us, right, by Let's Venture. So my question to each of you, and we can figure out exactly, it's a little easier when we're in person doing these panels, but the question to the panel is, from your point of view, how has the investor landscape changed in India over the last 5 years? Because 5 years ago, I don't think all three of your ventures operated the same way as they would today, right? The landscape definitely has changed, right? So, whoever wants to jump in first, and if you're all talking at the same time, I'll moderate, but my job is to get you guys chatting. So I don't know who wants to take that first. Don't be polite. You just unmute and start talking. And
yeah, I can go first and be impolite and speak ahead of the ladies. But yeah, you're right, Steve. I don't know. I think Let's Venture, Sunitha, started possibly in 2015. So Steve is right. Maybe forget ventures existing in that form. Some of our ventures did not even exist. At least mine did not. We started the earlier avatar in 2015. So I think there have been, a few secular changes, I think, in the investor landscape. I think the big one to me is just the breadth of capital available. Right? Back in 2015, 2016, you didn't have not just there was quantum of capital available, but it was possibly focused on certain domains in certain stages. There's just a lot more breadth in capital availability. Breadth in terms of stage, breadth in terms of areas, breadth in terms of niche. Second thing is, I think the availability of institutional capital at seed level, right? And towards the tail end of Amaya's session, he spoke about go from angel to friends and family to angel to investors. I think that the amount of institutional seed capital, serious change in India. This whole, Steve, I guess in the Valley, the emergence of micro VCs, and I think the similar trend of almost folks like us who don't run large funds, but and hence are entrepreneurs on our own, right? I mean, you don't make a ton load of management fee like the Sequoias or the Nexus of the world, which means that for micro VCs to succeed, we're working on shoestring budgets, and we're as much entrepreneurs as the companies that we invest into. Which means that the funds are as vested in the destinies of their investments, possibly a lot more vested. And the last thing, and is the last, I think, feature in the landscape is just the availability of enterprise B2B tech capital. And that's something that's close to my heart, because as a fund, that's what we set out back in 2018, saying that there's a gap, and it's really heartening to see how that gap is being fast filled across all Over to you, over to the lady.
Okay.
Thanks, Rajiv. I think adding to that, right? We've actually been 7 years into business now, Rajiv. So even from then to now, when we see just from a sheer number of funds which have started, that's one. Two, in terms of the kind of investments they're doing as well, right? While Rajiv mentioned the breadth, I also see a large concentration of investments in the early stage segment. Just the last 3-year data, if you see, actually 40 to 50% of the investments are being done by micro funds, or even the larger funds who are actually looking at a $500K to $1 million investments, right? The bigger guys are also doing it because they want to get in early and then kind of double down on their investments going on. So you see the number of VCs actually in early stage investments dramatically increasing. That's one. I think the other part is also from a angel investor perspective as well, right? Just from our own platform. We today have investors from almost around 55 countries, right? Who have voluntarily come and said, hey, what, we want to be on this platform to be looking at investments, and the kinds of investors as well, right? Entrepreneurs, senior professionals in organizations, second generation family business folks. So all of this, that kind of has expanded the pool of people who are actually looking at this investment class itself, right? So that's another part. I think the one final thing which I also want to add is in terms of family offices, right? We do know they've always been a little more risk averse, but I think we're seeing that change a lot as well, where family offices are actually putting their hand into startup investments. May not be too much into early stage investments, but growth and late stage, definitely they're actually getting their feet wet right now. And we hope that a lot more domestic capital actually increases in the market over course of time in the later stage of investments.
I will pursue to that. I completely agree. With what has been said by Rajiv and Sunita. It's true that 5 years ago, in the newspapers or portals, we were hearing about the big names, and who invested into startup. But now, the landscape, has grown so much, and India has been really put on the map for investors at large, globally. I think, I was one, to make, always, the branding flag of India, in Europe, saying, hey, guys, India is just, the third, hub of a startup in the world. You should look at this. I think now it's completely under the radar. Still, we have progressed doing so. I think there is scope for attracting more investors globally. But true that also domestic investors and micro VC and family offices, the number of the ticket, the diversity of ticket size in terms of business angels as well. So business angels were very, very small type of ticket size. So and that were just a category. Now the ticket size is also very much diverse. But landscape is not only about investors. It's also in terms of startup themselves. I've been very impressed, in this startup hub, global startup hub, in India, to see that many subjects to be tackled, and how the degree of maturity, the degree of diversity of startup that we have in India, and that really much more organized, very to the point for the domestic problems, but not only, and that's make the investment even more exciting.
If I could summarize from what the three of you said, because I feel like there's a common thread between it, is it's a combination of higher quality startups over the last 5 years, or even going back further, and then more capital entering the market. That is, I think each of you said it in a different way, is like, people have discovered India, both domestic investors and foreign investors. And I think one of you also was mentioning just about like, now we're starting to see a little bit more of the institutionalized seed rounds in India. And that actually is a big sea change, because besides the fact that people need money to get off the ground, what we've seen in the rise of micro VC over the last 15 years is now when companies start going a little later stage, they're far more institutionalized. Meaning they know how to run boards, they know how to do a budget, they know how to do ESOP plans, as opposed to in the past, our first check into a company used to be a mess. My partner Titus, which some of you know, I remember this about 7 or 8 years ago, we had the conversation. He goes, sometimes these early stage deals are so difficult because we have to clean up the cap table, we have to clean up the ESOP, and now all that's being taken care of because of their institutional round. So that actually starts increasing the quality for these companies in India as they start raising their next round. And that actually leads into my next question is in your guys' opinion, what are the best options for seed and Series A investments in India? And the scope of that question is, I was born and raised in New York City, and a lot of you know my story. Then spent many years in Hong Kong, and now about 7 or 8 years ago migrated to Silicon Valley. And I watched both New York City in the early 2000s .com era, or the late 90s, early 2000s, go through that transformation, and then I watched Hong Kong go through it, a decade ago, which was, when I first graduated university, that the seed check was literally passing the hat around for friends and family. And now it's all institutionalized, both in Hong Kong and in New York City, and it always was really in Silicon Valley for at least 25 years. So in the three of your opinion, what are some of the best options for seed and Series A? Like, is it international? Is it domestic? Is it funds? Is it angels? I'll pass it off to you guys and see what you say.
I will actually. Okay, go ahead, Lipin. Please go ahead.
I would say that depends, on the ambition and the purpose of the startup, right? So there is no way, to me, that a startup, that.
I think we're losing the feed from Ludwig.
Yeah, I think we're losing her a bit. Maybe we can skip.
Yeah, we can WhatsApp her and try to get a reconnect, and then I think
I will do that. You continue. Yeah, sure.
Okay.
So I think it's a mix of both as well, right? And I think it's also in terms of the kinds of startups which are there and the fund sizes. So even like you mentioned, I think one of the other changes which we have seen is the deal sizes itself, right? What started off as maybe $1 crore, $1.5 crore, it's either a 3 crore or $1 million today. If you're a slightly more senior entrepreneur or a serial entrepreneur, you do a direct $1 million to $2 million. So I think it also depends on the kind of founder and the stage in which you're actually raising your funds, even if it is somewhere where it's a mix of angels and VCs. And I think as a startup, one of the things which they need to think through is why do you want the money? Amey also kind of brought it up in his last session to say you shouldn't build your business for raising money, but you're actually making money through your customers, and this is just kind of helping you in your growth, right? So from that aspect, when you actually take a step back, you'll then see what is this money actually needed for, and who should I raise funds from, right? So if it's really early stages and you are new to certain aspects, you also want to have people who can support you on those things, right? So that's where your angels to an extent come into picture, where People could be from different domains. People could be business experts in different segments, and actually support you through that journey for you to get your next round, right? So that culmination of angel group actually then makes a lot more sense. But if you are looking at, say, even a $500K to $1 million first round, then I will say do a mix of both a VC plus angels, because then you also have somebody who's done a slightly larger quantum, who also has a capacity to write in a larger check for your next round as well, right? So you will do a culmination of both when you're looking at your round sizes there. And just from a foreign perspective, I think it's also about what is it that you're looking for from a foreign investor, right? I think it's about, do I want connects because of which I want to grow in an international business? Is it their experience which they're actually getting on board to me as a founder? It's, you need to know why you're actually looking at it from an early stage perspective, because it has its own regulatory issues in terms of taking in foreign money. But I think that is where you'll need to think of as a startup before you look at who you're looking at as an investor.
So Steve, I had a quick clarification for you, right? So when you said, did you mean from an investor perspective, what are the best opportunities across Series A? Was that your drift, or was it something else?
To be honest, it was fairly open. As most of the audience are startup founders, right? So I guess maybe what are their options, but definitely sprinkle in what you're seeing as the best opportunities, because quite frankly, that's one of my questions. I'm kind of leading to that direction anyway. I'm going to start, to give you a preview, and like two questions from now, I'm going to start asking you what the three of you think the best opportunities are domestically and internationally. So you can sprinkle in a little bit of foreshadowing in your answer if you choose.
Yeah. So So I think I think for founders out there, I just believe that, and I think it's kind of panning out differently in different spaces. I think in the consumer tech space, just my sense that seed is beginning to get harder, right? Because I think a lot of stories have played out, and I think they've done their 7-10 year cycles, and I think harder questions are being asked. Besides, because of the presence of large horizontal behemoths, right? I think consumer now just needs to be a lot more sharper and niche and stuff like that. So I think in the consumer space, while angel could happen, I think seed still has seed is just going to get a lot more tougher, and I think the great investment opportunities on the consumer side are possibly in the pre-series A, series A stage, because some of the basic concept risk and execution risk is beginning to go away. But on the enterprise side, I think seed has some. So if you were a founder in an enterprise B2B tech company, I think there are some very good avenues to raise seed, institutional or angel, like Sunita said. Value-adding angels, maybe, and as an investor, I just see that there are so many great opportunities on the seed space, because it may be someone's solving a specific problem and you're building tech around it. You may still not have created the market, but you solved a problem and you've created a tech, and then you raise seed for that, and then you can go on to the next stage. Or this whole evolution of deep tech has its own interesting period. You raise seed capital to build out a certain stage of a deep tech product, and you go from there. So I just want to bring out that what I think is different relative levels of maturity of consumer tech and enterprise tech in India, and how that may play out in terms of what kind of capital is available for them.
I think we've had, is Naveen back? I want to give her a chance to.
Yes. I am back.
No worries. This is the COVID Zoom era.
Don't worry. No, there is scope, in India actually for having, a better network, or better, internet providers. I'm not on Gyro, so maybe it's my mistake, in fact. So that's really that. But joke apart, I think that depending on what is the purpose of the startup. If it's niche or if it's much more mass, if it's, again, something B2B, B2C, D2C as well, will be different. So before raising, fund, anyway, I think, know your product, know your target, and find investors, that are, making sense, for your venture. This is very trivial, but yet, many startups are not doing this work necessarily, so they are a bit lost, in this question sometimes, because that requires a mapping, right? So the matchmaking between an investor and a startup, depending, the stage, the product, the geography. It's a lot, so it's a lot of time to spend, to map correctly, because if you do that, then you have more chances, to address correctly your investor, to pitch, the right way, and to be successful, to get the funding, so, yeah, I would see that, from this angle.
Okay, yeah. At the very end, you cut out there, but I think we got it all. Just to let you know, your last sentence was a little choppy for me. But if I could thread together what the three of you said, is it's starting to look like a very different landscape than it was a few years ago. Like even three years ago, I think it was very angel driven, very now it's a lot more institutional, which then I'm torn with which question to ask next, because I wanted to kind of ask something a little different, but I think the conversation stood us towards this direction. So I'm gonna change gears a little bit, be pretty agile, and say, now I'm gonna flip it back as investors. What categories are interesting to you today, right? Because and let me give you a little bit more context. Is you have, obviously there's, like I know, like Ludwig does fintech. I mean, I know that there's med tech, there's enterprise B2B, right? Not just the categories though, but are you looking for businesses, in India? What are the great opportunities? Is it domestic only? Are there the ability to build big global businesses? What are the investor opportunities that you're seeing as an investor, from both category, geography, and scope? And if, okay, great.
I can go first.
Sure thing.
So I think, Steve, we do B2B tech, right? So my answer is within that ring fence. So I think within the enterprise tech space, the market is maturing fast. I think over the general preference, right, very clear preference, is that products and solutions that are building not just for Indian markets but also for global markets. No two ways about that. 2 years ago that was like an absolute strident call, because the Indian B2B buyer market did not have that kind of maturity and depth. But that's been another fairly dramatic transformation in the last 30 months, I would say, where the large enterprises in India in the last 3 years have woken up to the fact that innovation possibly, cannot be created internally. So all of them are running accelerator programs. All of them are investing into companies. All of them are buying out companies. Many of the large enterprises, right? Both the startup variety, which is like the Flipkart, Olas of the world, as well as the typical large enterprises like Jio, Aditya Birla, and Axis Bank, Yes Bank, and some of these guys. But I think the underlying theme that we still look for, unless that there are very specific themes, then which are only relevant to developing economies, even there we would look for applicability outside of India. And I think, but if I were to dive in more specifically for the benefit of founders out there, is I think going forward over the next year or so, really the areas that are beginning to break out, which we find very interesting, is DevOps opportunity, right? Solutions in DevOps that are being built in India that have global applicability. Security. Cyber security, tech security, cloud infrastructure optimization, all of these spaces. And you see the underlying theme, right? It's all around maybe the tech stack. You're building tech solutions which you can take to market. And I think that will slowly begin to change. If I were to look a few years ahead, then that possibly changes and becomes more mature. But let me pause there. Maybe we'll get back to my question later. But those are, I think, the areas that are really interesting for us at this point.
I think Rajiv rightly mentioned. Also, from a change perspective, Stephen, while we are a sector agnostic platform, I think especially with this year and COVID hitting the market, I think SaaS and B2B has definitely become a big portion of what investors are looking at. And even from a startup perspective, people who are actually in senior positions coming out and actually starting their own companies as well, right? Because monetization is in sight, and that's where I think a lot of people are actually looking to go. But having said that, I think from a B2C segment, while I think global markets always there, this year again brought about a lot of things from a digitization perspective for India, right? Which opened up a lot more opportunities, which maybe were 2-3 years ahead, but I think that kind of got fast tracked because of the current situation, with a lot more people getting access to internet, a lot more people having to do things whether they like it or not in a digitized manner, right? That I think opened up a lot more opportunities in collaboration tools, in health tech. I think those will definitely be very key in how things will actually play out in the next couple of years. EdTech, I think, has been on heat the whole year. That also, I think, we need to see an evolution of a lot more models in truly actually going digital and supporting the parents as well as the kids. But from our end, I think B2B SaaS across the spectrum, and in terms of B2C, we will look at more collaboration. We will look at more health tech companies as well coming into play.
For my part, I would say that so I have a tag with fintech. However, what really interests me more is transformative. So transformative innovation. How to transform very traditional sectors into a version, 2 or 3.0 of those, sectors. I'm thinking, so, if you take finance, it's a big mammoth, right? So fintech are there, to give, enough innovation with blockchain, with quicker, transaction and so on and so forth. But there are thematics like logistics, like food and hospitality, where food tech, is there, and that embrace, the whole thing, from B2B to B2C, and so I think, those, aspects, this transformation, how, all technology and innovation are there to really add those, sectors were, capturing a lot of employment, in a country like India, but wherever globally, and they are not there to disappear. They are there, to get helped by those startups and those ventures to get integrated as a whole ecosystem, to get transformed and to push the world. So that is much more, I would say the thematic that I had in mind. And another pillar, who's also very quite dear, to my heart is, what can be very interesting, to invest into, could be startup that, whether by their purpose or the way they are, developing their venture, have in mind sustainability. We talk at at large in the listed space, where finally I come from. Guess what? There is a pile of money, transferring to funds, that have to invest into ESG, compliant, the best, best in class, type of companies, whether it's, their purpose or, their behavior. And I think, that will go to, toward the private, equity and the venture capital, where more and more investors will have to probably filter their their choice with companies as such, for a good reason.
Well, this is actually really exciting, and let me explain. It's harder when we're all remote to kind of show you my excitement. Is very few markets. So let me take a step back. As what all three of you said, actually for the first time said something different, right? Like a lot of you were saying very similar things, right? Now you've all said different categories, which is amazing, because I heard fintech, I heard ESG, I heard enterprise B2B, I heard B2C, I heard international, I heard domestic, right? So I literally heard the entire spectrum. And I think there's only a handful of markets globally that can do that. Meaning, if I was sitting in Silicon Valley with a handful of other VCs and we said, what are the opportunities here in Silicon Valley? They would have had the exact same answers, right? And I would say the only other market besides maybe India and Silicon Valley, or United States, or United States and India would probably be China. Right, which again has similar characteristics to India insofar it has a entrepreneurial spirit with a large amounts of capital and large amounts of supply of entrepreneurs and lots of problems to go solve, and can have global scope. Now, for geopolitical reasons, China has much more challenges with global scope, which we could fill 10 panels on that, especially as an American. We get some weird opinions on that one. I think United States and India is trying to have a contest of who can be a bigger bully with China, right? But that said, I don't feel like you have a lot of these opportunities, let's say in Europe. I feel like in Europe you get very specialized, or maybe they're thinking only continental. They're not thinking as globally. They're not necessarily thinking as broad. Same thing, in the other emerging markets that we're interested in, like Latin America, Africa, Southeast Asia. These are the kind of the next generation, right? The next decade, we'll start seeing those markets grow. They're still very localized. So India went through those growing pains, which was exciting. So my next question, kind of, which was the previous question I wanted to ask, but it was great because this was a great bridge to it, is, looking at Flipkart, you're starting to see a combination of, like something like a Flipkart that was, sold to an American company, mega valuations. You also see very domestic specific companies. You also see things like Oyo, which were domestic that expanded abroad. Since you have everything in India, should an Indian company at the stage that like the audience is in this, which is matched to the stage you guys all invest in, which is, early stage, seed, Series A, should they be seeking foreign capital? And if so, why? I mean, is it, or is it, I'm sure the answer is it depends, but I'd like to hear all your opinions on it.
I would say that.
Before you go, hold on, just one quick clarification. Sorry to interrupt. I didn't ask the question properly. Is the reason to seek the foreign capital is because India now is like this, producing startups that have global scope, right? So that was kind of where I want to scope that. Sorry, continue.
Not at all. No, I think yes, there are. It can be possible, for a startup, in a pre-Series A stage, to raise capital abroad. It's very rare. To be honest, what we can see, and it's quite logical, is like. Usually, you start with a market, as when you're a startup, and then you expand, right? So if your startup start to be a bit more global, you have this legitimacy to probably approach foreign investors. The problem is like, foreign investors, when you approach them and you're not that global, or you not do sufficient, activities within their boundaries, their borders, at least, they won't necessarily consider you. So they will probably, put you under their radar, but they won't, sign a check. The reason is like simple, they have to run a fund with a mandate, so if you are not, that mandate, it's very difficult. So luckily, we have more and more, funds that are, focused, globally and on early stage. So those ones can be approachable. And obviously, if they are global, it's because, they also want to help those the startup to be global at their turn, but otherwise, if you stay pretty regional or pretty domestic, for me, there is no credibility, to approach a foreign investor.
I think I will flip on the other side from an investor perspective, right, Stephen? You are yourself an international investor. When you look at an early stage startup, if you do not have a presence in India, I think you will then bank on somebody else who's also a credible name or other investors alongside for you to be able to take that first step, which means in an early stage, it might not be as easy to get that big name where you're comfortable with as well. So normally, first rounds domestic is easier to be able to close off. And the next round actually along with a foreign investor becomes easy to approach as well. Even though I might want my first investor to be a foreign investor, it is easier to approach and close when I know I have either built enough traction because of which they also have that conviction on my business. Two is also where they also see other people who they know and are aware of who are co-investing alongside as well, maybe, right? So that's something which I would look at from an investor perspective today, because even investors today on our platform, like I said, a lot of foreign investors, but if they don't have feet on ground here, they're a little uncomfortable. So they would want to see who else maybe is doing the diligence, who else knows and understands the space for them to co-invest in the early stages, right? So I would look at it from that aspect.
Yeah, and I think that's a great point, Sunita, and I fully agree, right? Is that, it's hard for a seed stage startup in India to raise or get access to a foreign investor. But that's where, Steve, my earlier point on the emergence of a whole bunch of micro VCs and greater institutional seed capital being available is a good thing for founders, foreign investors, technically. But round one, like Sunita said, is possibly got to be domestic, even if the market is truly global, because there is a certain need of legitimacy that possibly is not there. But especially for B2B tech companies, once they do the first round, I think from the second round onwards, because the US specifically and more generically, more other developed markets is going to be the target market, right? So it's not just. It's almost an imperative for my investee companies to be able to get some domestic foreign capital on as they go along. Many reasons, right? Market access is the biggest reason. Access to playbooks. I mean, for however smart we might be, there are folks like you out there and a whole bunch of funds who have access to different sorts of playbooks to grow, to build out the business model, to find growth hacks, right? And just in terms of buyer acceptability, enterprise acceptability, I think it's a great conversation to have, to say that we've got ABC investor from Silicon Valley, someone from the East Coast, whatever that might be. So I think there's a whole bunch of imperatives, but I guess the playbook and the way it's emerging, especially for B2B, is that do your round one with domestic, with and then as you go into round two, it also then makes it easier for the foreign investor to come in, because like you said, there is an institutional investor on the cap table that have ensured a certain level of process rigor and fiscal discipline, which kind of makes it easier maybe for the foreign investor also.
Okay, cool. And I think that makes it an attractive market, right? Because some markets don't have access to the foreign capital, or their domestic capital is so messed up that they can only go to foreign, and then it's a challenge doing it remote. Like Hong Kong had that problem. Like the domestic market was actually, there was a lot of capital there, but it wasn't really structured as angel and VC, is more like PE money, right? So watching India evolve like that is actually from an outsider, right? Is amazing to watch, because then I see there a lot of opportunity, right? Hence why I keep engaging with the market. And it's great hearing that all of you really have a very similar opinion on that, right? If all of you kind of came back and said, no, like startups should have, their first round should just go to Silicon Valley, because like sometimes in some markets, that's what they say. They say, after you do your angel round, just go to Silicon Valley and raise money, right? Like, Eastern Europe is like that, where some of I have a lot of roots there from a business I founded there, helped found there a number of years ago, right? So it's great seeing that change in India. We have time for 1 or 2 more questions, and then we're going to start bumping up pretty soon. I told you guys it would go fast, right? We're going to start bumping up against the next panel. Luckily, I'm the moderator of that panel, so I have a little bit of control over that. But one more kind of our questions that I would have is, since there is opportunity for investors like myself, right? And I'm not asking this for selfish reasons. What advice do you have, scoping it obviously for our audience that's listening, right? But what advice would you have for a foreign investor, right? And I ask this not selfishly, if meaning is if you could, because I feel like I'm doing okay. Knowing that you have local entrepreneurs, you know, at this event that might be, so maybe I'll switch it around, you know, they might be pinging foreign investors, you know, like what would your advice really be to both parties, I guess, from that perspective, right? For the local entrepreneur, and then of course a foreign investor that's talking to a local entrepreneur.
You know, I'll go first again, Steve, with the selfish reason. Like
be my guest.
So, you know, so I think, you know, advice, so I'll just stick to the advice to the foreign investor, if there is such a thing. I think that there is a lot of fear, like you rightly said. It just makes it hard for a foreign fund to come into India, and that is a constraint as we speak, right? I mean, investors such as yourself, if you come into India directly, then you've got to have Indian tax status, and that just poses a certain level of complexity, perceived and real, right? But I think there's only one way around it, which is that foreign investors have to stop fearing. This can be done. It might just be a little harder. It may be administratively more complex. As long as you have got a good tax lawyer, a good structuring lawyer, and you know, good legal folks, I think the way to go is to start flowing through. And two sub aspects to that is, and this is where the selfish part comes in, right? Is that you possibly should partner with a domestic fund, domestic seed fund. Such as ourselves, right? Such as ourselves, because I think that makes a lot of sense, because you know, take away some of the fear, you take away some of the local you know, nuances away. And the second piece of advice I would say is for foreign investors coming in is to maybe not be so generic, but pick a few niches, because I think from a founder perspective that helps build a brand for yourself. Right? Say that. Okay, so we're a value-based fund. We focus on cross-border market access for, let's say, area ABCD, right? Could be, you know, fintech, DevOps, and cyber tech, right? As an example. That just creates a well-rounded positioning for maybe you as a foreign investor, creates a good recognition for the founders, because they know that, hey, this is the reason why I think I need to go to this investor. Yeah, so let me stop there. And,
cool. Yeah, I'll let the other two. And then we'll wrap up. But I have one very fast question for all of you at the very end before we transition. So I'll let you guys finish up.
I agree with Rajiv in terms of either partnering or being in touch with some of the key investors in the market. Could be marquee angel investors as well as funds. I will say it because we are an angel network, angel platform as well. But I think it's important to have that feet on ground to be able to get a better sense of how things are playing out. While I think he's covered that part of it, I think one other thing, while it can be a very different Pandora's box, is also about valuations, right? I think one of the things which we have seen consistently is when it is a foreign investor who's coming in, the valuations could be slightly on the higher side compared to what an Indian investor would do, which also means it skews the market a little bit in terms of how things are playing out. So I think some of that aspect in terms of being able to understand how the market actually is and what are the kind of rough ranges it is in, as opposed to how things are in the valley, right? I think that becomes important as well, so that there is some sanity in terms of being able to maintain numbers in the market too.
Yeah, I think, you know, I agree with both of you. You know, it's the ecosystem power. You know, so ecosystem doesn't mean just one pocket ecosystem and another pocket ecosystem. We have to make them communicate together. It's you know, by the way, that's totally, you know, the purpose of the company that, you know, I created, like, is to create bridge, right? You know, so necessarily when you create those bridges, it's better for the value. It's better for the due diligence, to have also, you know, a debate on different filters, you know, with some landscape, you know, for some for some startup, category can be very different in Silicon Valley and very different, in India. There is no plug and play, no perfect thing, that can stick to all the markets. So it's interesting to have this strong link with and ears, and little hands, I would say on the ground, to advocate for one thing which is absolutely key in investment is trust. It's about money, so money is about trust, so we should not forget that. So
that's a very common theme, very common theme from the three of you, which I think is very appropriate. Before we thank you and say goodbye, I want to ask you in a lightning round one question. And I think you know it's coming because I warned you on email. So when lockdown is over, what's the first thing you're going to do? So in the perfect world where like a button was pressed and things were back to normal, I know that that's not going to happen that way. But what's either the thing you miss the most, or what is the first thing you want to do? We'll go backwards order. Sunitha, you go first. Backwards order from the slide deck. Personally,
I will take a break and go to the mountains, right? Definitely need a vacation, right? But I think from an overall perspective, meet people. I think business has definitely changed in terms of how they work. The meet definitely changes a lot of things in terms of how you do business. So that is definitely one of the things that should be done. At least my team, if not other people, at least the team, I think, is the most important thing.
Sure.
So Steve, yeah, I guess I'm a very old-fashioned guy. I love meeting people. Professionally, yes, but even just friends. So the first thing I'll do is just go back and spend hours and hours chatting with friends, which I would normally do. Also overdose myself on Indian street food, which is not that I'm not doing it, but I would overdose myself on it.
I like it.
So Steve, you know me, I love India. 14 years here, I can only love India for that, but yeah, I jumped, the next plane to go back to Europe and hug. So namaste is nice, but hug is also very good. I hug my family, who's been, very wondering about, COVID situation in India, and in fact, I'm much more worried for them, the other way around. So that's so that would be family and trip and hug.
Yeah, I have a similar one. It's more of an obligation, and then actually what I want to do is, from New York, my 5-year-old daughter's 4 grandparents, my wife's parents and my parents, want to see their granddaughter after, going on a year now. So that would be my first move too. So with closing with that, there was 1 or 2 questions in the audience, which I actually think is probably more applicable for the next panel. So I'm going to hold them.
So, Steve, I'm going to take your question as to what's going to happen to us after the lockdown is over. Yes. Okay, please take this as an open invitation to all of you to meet in Hotel Rupali in Pune and have a big masala dosa with everyone.
Yes, that was. I should probably change my background to the giant dosa.
Absolutely, yeah.
But I would like to thank the panel. I'll give you the virtual round of applause. I know we're in a big room, we'd get a big standing ovation or something right now, but I'd like to thank 3 of you for spending the time this evening with us, coming together on relatively short notice. And thank you for your insights, and we hope to see you next time.
Thank you so much.
Thanks,
Thank you, everyone.
Thanks a lot. Everyone.
Thanks. Yeah.
Appreciate it. All right, Girish, I think we probably want a quick bio break, right? Let everyone just as we get the next panel up and running.
Absolutely. I think we got Sonal, who is already working on that logistics, and we may start in another few minutes, maybe 2, 3, 4 minutes.
Sounds good. Well, we could address one of the questions. One of the questions that came up was asking, are there more investors chasing startups? If I can summarize the question, right? Are there? And that's actually the first sign of a growing market, is when the capital expands faster than the entrepreneurs. So if the person who asked that question has that perception that there are more VCs and investors chasing startups. That's actually, I don't know if that's true or not, but that's actually a good sign if that is the case. That usually, that usually irons itself out.
Mm-hmm. Okay, that's awesome. Maybe
Okay.
if you're not taking the break, maybe you can address this one more question as well, right? Or you want to hold that back for the next panel, the co-founders panel?
I think the retail question, yeah, we can get to that one. Yeah.
Sure. So I'll just check with Sonal as to how ready we are, and then if you're good,
I think we have everyone.
Ashish should be the same name. Okay, so we got Ashwini already there. Ashwini and yes.
Do we have Pat and Sumit?
Yeah, we got Patan, Ashwini, and Sumit. I saw him. Sumit Sinha. 2 minutes. Okay, Sonal is just letting him in. Because I saw Sumit raising his hand.
We could have a musical. Yeah, he's here now. We can have a musical interlude. Usually when you're in a conference room at a hotel, they turn on the lights, play a little music.
and we got something called the Cyrac break, something like that. We would have planned next time now. Then,
Yeah, we can. And with everything being virtual at Fresco, our Slack usage has went through the roof, and we have one of the channels. We actually have to delineate between the weeks because it's part of our internal process. There's a workflow involved, right? So it's on Tuesdays. It's basically our investor committee meeting, right? And what we'll always do when the last thing happens, and now we're going for the next week, so like when it's flipped over, someone will choose and just put 10 icons across and just say musical interlude.
Yeah, that's what it is.
You have to when everything's virtual, you have to kind of have some fun with it.
Yeah. Alrighty, Sonal has given us a signal that we can even start this if everyone is okay. So this is co-founders panel discussion. Welcome everyone again. Steve, go ahead, because we have continued the same audience and okay, this is the slide and it's you now. Go ahead, please.
All right, so I'd like to welcome our panel, and what I'll do is obviously the audience all knows me now since I moderated the last panel, so I won't bother talking amongst any more about myself. For the panelists that joined, I think all of you know me at least casually. So my job here is to facilitate the conversation, and the way that we'll do this panel is I've got a handful of questions I want to ask. I've got 1 or 2 in reserve from the audience, and I suspect that the audience will probably filter some more questions through. If the audience doesn't have a lot of questions, I can just keep asking questions. Or Girish can start asking questions.
You're the audience.
We won't have a problem keeping you busy until the end of the hour here. So we'll go for about 45, 50 minutes or so, just like the last session. But the last session, the time just flew by. So what I'll do real briefly is give everyone a minute or two just to quickly introduce themselves. I'm going to start with Ashwani. I'm looking on the slide deck, and I'll just move kind of on over. Take it away.
Sure. Hi, Steve. Hi, Girish. Thanks for the invitation. To start off with a little background, I'm Ashwani Kumar. I'm the general manager and country head at Empower Financing in India. Empower is a Washington, DC based startup. It's been in existence for close to 6 years and focus on education loans. Here, I've roughly about 16 years of experience in financial services, and most of my roles have been either in startups, consulting, or focused on solving problems related to scaling, restructuring, realigning. I started my career in India with Tata Consultancy, went to the US for a business degree, and then worked my way through various organizations. Prior to coming to India, I think that was just last year, I was thinking about how I was researching a lot about the startup ecosystem in India and what would I do if I want to go back. And when I decided to come back, the education sector and the financial sector, I think the Empower, the way it positioned itself, seemed pretty lucrative. So I'm from Delhi, and when this offer came up in Bangalore, I think it was a great offer to pass. So not to pass, so I came down here. This is where I am.
Great. Pat, we'll switch over to you.
Hey, hi, this is Patan. You can hear me, right?
Yes.
Mic check. Yeah. Hey, this is Patan. I'm the co-founder of the Walnut Personal Finance app. We are India's most loved personal finance app with more than 10 million users. We are now a part of Capital Float, which is a leading NBFC, digital NBFC lending company in India. And we do a bunch of things across the personal finance and lending space for consumers and small businesses. Yeah, that's it from me for now.
All right. And I'll go to Sumit.
Hi, everyone. Thanks for inviting me to this panel, Stephen. Really, really great to be here. I'm Sumit. I'm the co-founder for Fable Care. And it's been a crazy journey for the last 2.5 years. We are India's largest chronic disease management company. We have beaten some of our close competitors in this space and have emerged as the largest. And I was previously a co-founder of another company which was acquired by CureFit. Otherwise, I've spent about 10, 12 years in various management consulting, technology consulting firms, and live my life all along in India, traveled to more than 40 countries. Would love to do that if I'm not a co-founder anymore, but hopefully that should change in 5, 6 years' time.
Well, you also have the excuse of COVID right now. So you can be like,
Yes.
all right,
Yeah.
Sometimes it gives a convenient excuse.
Yeah.
Okay, great. So thanks again for giving us your backgrounds, and it gives the audience a little scope. When I was recruiting the panel and putting it all together, I wanted a diverse background, which I think we have, with different levels of company stages, right? Patan has been through an exit already, Sumit exit the previous company, right? So, so where I'm looking for here is, in your view, what are the big challenges, like the top challenges that you faced, running operations or running the company in India, and where do you see those challenges changing in the future? And to scope it, what I mean by the challenges, like, not to be super over-ended, like, is it a combination of, is capital scarce, was talent scarce, leave COVID out of it, obviously, but we can get to COVID a little later, right? But like, in general speaking, what are some of the key challenges, for doing a startup in India? Like, for example, if you asked me this question and I was a startup in Silicon Valley, I would say it's hard to get people to move here as much as people want to move here, because there's no place to live. Well, pre-COVID, right? There was, we basically have, 100% occupancy. So real estate is very difficult and the cost of living is difficult. So what are some of those challenges in building a startup? And, is it cultural, that type of thing?
Yeah, maybe I can start on that.
Perfect.
Yeah. So I think, funding has always been a challenge, raising early stage capital, though it has changed in the last few years. In the last 5 or 7 years have been much better from a seed and a late stage capital. But I think getting the right kind of seed capital and the whole maturity of the ecosystem around funding and in terms of being able to raise capital for companies, I think it's, obviously it's where the market's at, where we are. That has been an ongoing challenge. And the other interesting thing is, while it has become easier to start companies in the last 5 years, it has also gotten more difficult to start companies, right? So while that's a bit of a contradiction, there are, like, funding has eased out if you compare it with few years back, but at the same time, it's difficult. A lot of the ideas, I think Amey also touched upon it, a lot of the ideas have been built out. So the market is more mature in terms of what kind of consumer or B2B ideas you need to build out, right? Also, it's not an insular market like China, where you really have to think only about your country or your geography. And the competition is really Silicon Valley companies coming in, European companies coming in. So there is no, there is no inherent advantage of geography that we get in most areas, right? Unless it's a regulated or financial kind of area.
I would like to take a more competitive approach to this question. I think in general, like when I'm looking at timelines, right, the timing is good. And when I look at it, like how the evolution has been for the last few years, like a decade ago when I was trying to do a startup, I mean, barring large organizations, most others could face very common fundamental problems. I think something that Patanjali also alluded to, regulatory burden, right? Entry was not clean, permits, compliances, understanding volumes of legislation, tax codes. Without an expert, an entrant could not do it. And even with an expert, there was corruption and all those issues, right? A few years back, a friend and I, we set up something in the US with zero help and support. We could do it all by ourselves. We understood the tax codes, we understood what structure we needed, completed all documentation by ourselves. And with very minimal external support, we started the operations, ran it, did quite well, sold it. It was all easy and clean. And the third time for comparison is today, right? So when I compare it across time, right, I understand standalone, we still have some of these, issues, but there is also some significant improvements. Of course, all problems have not gone away, and reaching a US standard of some of setting up the startup or moving that forward, or even right now we are doing some changes in our own startup, right? And that is again a scalable issue of how the regulatory side works on that. So those kind of things still persist, but I think people today, they have a lot more access. There are tons of forums that teach you this stuff. And I think importantly, and including the internet, right, which comes right after oxygen and water and Maslow's hierarchy today, I think that helps play a part. And the other point I want to make, I think this also Padan referred to, is the sophistication of the market, right? I mean, a few years back, professional grade fundraising was definitely limited to mid-large organization, right? A small startup or new entrepreneur would either take the conventional loans or lean on friends or family, both of which positioned large issues. Now, the concept of angels and VCs was also pretty limited, and exposure to those networks was quite small and protected. Right? Today, you throw a stone in any direction in Bangalore, you'll find the ecosystem ready, at least to clearly tell you where you stand. And a simple search online helps penetrate you through some of these forums, online learning tools and all. So I think I'm focusing this question from if a person has to start a startup, or what are the early challenges from that standpoint. But needless to say, I think, again, when some advantages come, then the competition also comes along that as, so yeah, and I think it still persists from that standpoint.
Yeah, I think my fellow panelists have already covered most of it. From my point of view, I think one of the what I have faced as primarily two challenges while starting up the last one and this one. Obviously, funding maturity has been, there have been various cycles of funding maturity in India. 2015-16, you had a PowerPoint, you could get the money. You just go and pitch, you potentially would get 200K to start with. You might not get $1 million after that, but you will definitely get a 200K check. Right now, I think the market has matured. No one is going to give you money just based on slides. You need to definitely put some traction in place, something in place to kind of get it going. And at least that level of maturity, it has. I think we have got to that level of maturity. I do feel that in terms of that bridge capital, those pre-Series A and Series A, there is definitely a gap. So while early stage, capital is definitely available a lot in India, the bridge capital between a large growth stage company from the inflection point of product market fit to growth, I think there the capital is missing, and it's not missing primarily because people don't want to invest. I think what has happened is in the first 10 years, people have actually burnt a lot of money in funding non-fundable or not a lot of EBITDA positive model. So I think that has really taken a hit on the sentiment in the market on funding for a very long time. And I think in general, while a lot of people still understand in early stage that returns could be difficult, but a lot of people actually still expect the returns to come out in 3-4 years, even at early stage. Where if you really compare US market, etc., most early stage funds never even have a horizon of 3 years or something. All of them tend to end up having a horizon of 7 to 10 years. And I think that really speaks about, a lot about the maturity of the ecosystem here. The second is, even if you had money, I think finding talent has become really, really tough. You need, as the company kind of grows at early stage, you need, people who are aligned with the founders, who understand that they are going to take a haircut. For example, at Fable Care, the first 10 employees who joined, all of them took 50 to 60% haircut. Now, you really don't find that kind of people so easily in India who are willing to take a haircut in their salaries before they, join a startup. So they really need to believe in the vision and join. So that's a very different stage of the company. Once you get growth capital and you start putting money, and you need more, people who come with operational excellence in execution, I think it becomes really tough finding some of those people too. Specifically, your leads for specific functions, it does become a lot challenging in finding those leads who would not have an MNC mindset, who should have a startup mindset but function like an MNC. So it's a bit of a dichotomy in hiring those set of people. So I do feel that these challenges exist. Third thing, while India is considered to be the tech capital of the world, finding good engineers is a problem, right? I'm not sure how many people have really faced it, but good engineers are, really hired at top companies like Amazon, Flipkart, and you name all of them. Unfortunately, as a early stage startup, you may not be able to give that kind of money, and someone has to really believe in the vision to join you to basically put the output. So those were my challenges essentially.
Yeah, and what's interesting, the three of you like tying together what all of you said, because you all did say some things that are quite similar, but then you all made different points that all complemented each other. Is what I hear is having the privilege of having grown up in New York and then spent a good amount of time in Hong Kong, and then later in my career moved to Silicon Valley. I've watched the New York in the 90s and the Hong Kong in the 2000s ecosystems develop, and then came to Silicon Valley, which this ecosystem was already developed. And a lot of what you're describing are like the growing pains of an ecosystem. So that's the good news. But when I first got to Silicon Valley 7 or 8 years ago, everyone was talking about the Series A gap here, right? And that's just a combination of capital flowing into VC funds, bigger checks, things like that. But actually, one of the things that Sumit mentioned that I would like to kind of present back to the panel, because it's almost like he knew my cheat sheet of the questions I wanted to ask, was about the talent. Back in Hong Kong 10 years ago, or 11 years ago, I ran an accelerator. And when the people that came to the accelerator, they said it was very hard for them to attract talent because the culture in Hong Kong was, you go to study hard at school, you go get a degree, you then become a doctor or a lawyer, or you work at the bank, or you get a big white collar job, right? Going to a startup was almost like a sign of failure. And a guy who founded a startup, I mean, this is anecdotal, but like he founded a startup, and when he would go to the bars, he wouldn't tell girls that he worked at a startup, because that was code for being unemployed. He would lie and say he worked at the bank, right? So what is it, to expand on, Sumit mentioned that talent was a little bit of a pain point. I'd like to, to hear, we'll let you go last on this one, Sumit. So Ashwani and Patan first. You guys can choose which one, but what are your thoughts on, and I know, Ashwani, I know you have a pretty big operation, right? What's it like to recruit talent? What are some of the cultural challenges, and how has it changed, and how do you see it changing, in your answers for that?
Yeah, sure. I think, as Sumit pointed out, right, despite being the tech capital of the world, I think we still, we come across a lot of basic tech challenges, like, hey, they'll have fancy names, they'll have fancy degrees and great experience, but when it comes to actual execution, we run into challenges. I think more so than that, when we're trying to, I think there are various agencies trying to put India on the global map and continuing to put that and even scale that further. Individual organizations are also trying to compete at a global market, and as Padan said, not insular anymore. I think it does come into a little bit of the cultural challenges as well, right? I mean, really small, petty things like people are constantly late for interviews, right? I mean, despite the fact that moves them with the best benefits, you get the best perks and all of that stuff. But I mean, I think those are things for which, you are understanding for quite some time, and then you start, draining on patience at some point, right? So I think the competition is definitely fierce, right? And especially being in some of the major metropolis hubs can be an advantage for having access to talent, but there's also that stiff competition in the markets from both sophisticated large organizations and well-funded startups, right? There's also that caveat in the startup segments as well. So for startups, this should still be a good problem to solve, because startups need people who can understand the issues and inner working style of a startup, the flexibility, the ownership, and the self-discipline approach. And we focus a lot of that during the interview process, but that's hard, right? It's very tangible to look at that, even if somebody has a startup experience. So to have that kind of a mindset and attitude works a lot, but having trained in another startup poses a much stronger advantage. And while we may flip the same argument in a tier 2 or tier 3 cities like Indore, Pune, Coimbatore, Lucknow, Ahmedabad, they've really changed the argument due to access to capital, talent, and excellent educational institutions and the competitive infrastructure, right? So making talent's choice for better quality of lifestyle, more diverse. So I think the talent is it's still a competitive market and I think increasingly getting more competitive in that sense. In fact, in the last quarter itself, I've seen, I think 6 or 7 pitch decks from, tier 2, tier 3 cities. So geographic competition is also there, apart from, I think, some of the challenges.
Wanting you to locate your operations there.
Yeah, it's better quality of lifestyle, but also for the employees, at the same time, they have a lot of competitive perks on that front. So from our standpoint, especially because we have a very aggressive plan for hiring for next year, I think we are focusing on what are the internal benefits, right? And how much more effort we can put upfront on the recruiting to minimize the pains, right? Because, whether they are coming from organized setups or startups, I think people end up being very fluid to small differences in pay, small differences in, I didn't think about it, but I think my wife has got a job 3 months after he's off pay, got a job with us, like in another location. So we want to minimize some of those impacts. I think COVID work from home has also helped. We offer work from home too, but in general, this has also helped for us to broaden the scope from that standpoint.
Yeah, I think first of all, Pune is tier 1 from a startup and tech perspective. So anyway,
this is a Pune sponsored event. Yes.
So one thing, the Hong Kong example that you gave, right, Stephen, it's very interesting, right? So in 2000, so one of the big things that's happened in the ecosystem in India is that the fear of startups has gone away, right? So while the ecosystem develops and funding happens, fear has gone away. So in 2000, if you were like coming out of college, I'm going to do a startup, your parents would be like, go get a job in Infosys, right? You're not going to get married. Whereas if you look at it now, you find that the acceptance overall is much more students coming out of, in fact, there are students starting startups when they are studying, coming out of college and doing stuff. And overall, it's become, there are a lot of success stories in terms of people who have made, who have been part of successful startups. And because of that, that stigma is not there anymore in terms of having to join a startup, right? It is difficult to hire a startup employee when you have like giants like the Amazons and the Flipkarts, etc. But I've always believed that you need a small team at a startup, at least in the early stages. You need a team that really believes in the mission, and it's really like an enterprise sales job to get someone on board, right? You cannot recruit like the larger companies, and you cannot obviously offer the stability that a larger company can offer. And for someone who's looking for that, they're better off doing that than being with you, right? Your job is to find that 1%. You're a 1%, 2% company. Your job is to find that 1%, as a founder, to find that 1%, 2% set of engineers who are, committed to the mission, and find out what it is about their, mission in life that aligns with what you're trying to do, right? And it could be different stuff. For someone, it would be work crazy hours and really learn new tech. For someone else, it could be just be part of a rocket ship, right? You have to dig out those people and hire them. So, I don't think it's going to get easier for startups to hire people just because the kind of people you're looking for are a much smaller sample from the larger engineer base, right? So it's always going to be like a tough one. The real problem is there are too many startups and a lot of them are funding, and then, the salaries are going sky high.
Which is the problem we have in Silicon Valley. Actually,
right.
The problems, both you and Ashwani's problems, like, we have Google, Facebook, but then we also have before their IPOs, Uber and Lyft, so the smaller early startup is difficult, right? And then
that is a challenge, getting in this 1 or 2% engineering and product management and marketing base. There's just a lot of startups because of the way the ecosystem is growing. So it's getting tougher and tougher. But I mean, that's I think 50% of founders' job is to build a team, right? So.
Agree. Yeah.
Yeah.
I
would just say, Stephen, I was just
you started this.
That I think, the Hong Kong example is slightly reversed now in India. So I believe that if someone is really going into a bar today and is talking to the person that they are interested in, and they say that that they are working in a startup, most likely, they are going to hit it off. So it's
same in Hong Kong now, 12 years later from my original story.
Yeah. So I think perception has changed a lot. At least that's the reality for startup hubs like potentially even Pune. I have not been to Pune, but definitely for Bangalore and Delhi and Bombay, where definitely the entire perception among the younger lot has actually changed, and people are actually doing startups, even as someone mentioned, in the last or second year or third year of their college. And I think in that sense, that has really come up. For example, I think there has been an exact story which has been in sports in India. No parent wanted their child to be a sports person in the 90s, right? But post 2005, and I think IPL kind of changed the game forever, where today every parent in India wants their children to be a sports star, or somebody, somebody who takes sports seriously. And it's not frowned upon if you're not focusing on your studies, but you are excelling in your sports. I think that perception has changed. I think a lot of our generation who are having children, I think that is essentially going to be carried forward. So I think, I think that transition has happened, and I think it will continue to seep through in tier 2, tier 3 markets too. But coming to challenges, as Ashwini and Patanjali, mentioned, and I think they mentioned correctly that you creating that first 10-member team or your founding team beyond co-founders is the most critical team, and it requires, I think, all the founders' capability to attract people, to to tell them what the vision that they are all in together. I think that really, I think you have to first sell to your first 10 employees or first tell 10 co-founders. You have to first sell it to them before you go out and sell it to anyone else, whether it is consumers or B2B audience. And I think that's, I think, one of the biggest founder skills. Somebody did put a question, how do you select a co-founder, or what is some of these things? I can tell you that as a co-founder, you need to be able to do everything in a company when you start, right? Whether if you're a technology company, you need to be able to write code. You can't say, I'll hire 5 engineers to write code. I'm telling you, in India, it may not function because you may not even find 5 people to write code for you at the money that you might be able to spend. So that's the hard reality of it, of starting up. So talent attraction, being able to convince them is one of the key roles of the co-founders, not just the founder, but the co-founders, all of them put together.
Well, I'm glad you saw that. I'm glad you saw that question in the Q&A, because I actually wanted to kind of then start transitioning into that, right? Because I think that's the next extension of the talent, right? Is in the three of yours opinion, attracting talent and attracting a co-founder might be a little different. Are there differences? Like, as you mentioned some right there, right? And what is it like attracting a co-founder in India? Like, is it easy? Is it hard? And then what are some of the things, I think you already started hitting on it, Sumit, like some of the desirable features would definitely be obviously development. But what are some of the, other types of features you'd want from that kind of founding team in a startup? And I might even jump in and give my opinion depending on what you guys say, because this is a topic it's near and dear to me as a 5-time founder myself, but not all at once. I'll start calling on you if no one jumps in first. I think Patan's going to jump in.
Yeah, I don't know. I don't know if you can actually find a co-founder, right? So if you look at most of the successful co-founding teams, they have had some past history. Either been in college together or worked together, had an idea, met through a social circle, understood each other, and then set out, right? I'm not aware of any really successful cases where it's a case of one person set out to find a co-founder for what they wanted, right? You could build out a co-founding team, but I think by the very definition of the word, you're either a co-founder or you're not. And then you can be part of the founding team. You could be a key part of the founding team. You could be like, you didn't come in and be the CEO of the company, run the company and not be the co-founder, right? You could have all of that, but the co-founders are the co-founders. You either co-found it or you don't co-found it. that's kind of the learning I've had over the last, and that may be a very polarizing view.
I guess what I'm hearing though is you either started the company together, so it's not like you found a co-founder. It's like two people had an idea, but you quit your jobs together and go do it. Is that kind of what you're saying?
Something like that, right? Or you were in college together, you had an idea, you met up and you said, hey, let's do this together. You have some kind of relationship to start off with outside, and then you gel together and build something. I mean, that may be a very polarizing view, but that's what I think.
I like it. I like difference of opinion.
Yeah, it's a good view. Yeah.
I believe that there have been some camps, etc. I know that there are a couple of accelerators, etc. in Singapore who match co-founders. So you can, you go there by invitation. If you have certain kind of talent and so on and so forth, you can go there, speak to a bunch of people, find your co-founders, or you can potentially go to a lot of these events where people are looking for ideas or looking to join something or click somewhere, right? But I will agree with Patan over here that most of the successful teams that at least that I have seen in India are the ones who had some history. Either they would have worked together or they would have spent time in college together. At some point, you just don't find someone immediately and say, this is the person I want to start the company with. I think that's rare. If something like this has happened, I would say that's rare in India. And I think one of the most important things in finding a co-founder, I think you can still do that. Ultimately, the bottom line is how comfortable are you with the other person, right? And the other person is in it with you for the same reasons that you are in it for, right? And if any of you are in it only for the money, then I'm telling you upfront that it will not work.
Run.
So it has to be a fair amount of pain point which you suffer, which potentially could bring two very different people who have never met together, on a journey. That could definitely happen where I say, yes, it's the same pain point that I'm facing, that you are facing, and let's do something about it. But ultimately, there has to be some gel factor. And two founders coming together and saying that we will make $20 million in 2 years' time, and we'll go home to the bank laughing, that's unlikely to work. So ultimately, there has to be a lot of comfort between co-founders. You might discover someone at a start of event, etc. But ultimately, it will all be defined by how comfortable you are with the other person, and to be able to take this as a journey. Because I'm telling you, your co-founder becomes your life partner. Because sometimes if you have another life partner, they will be envious of you on how if you're not spending enough time. That is my life story. I'm spending more time with my co-founder, and my life partner is envious that I don't spend enough time with her and I'm spending it with my co-founder. So all this is practical. But I don't know if you find a co-founder. I don't know what's the right answer to that. I'm not sure, because I have not heard somebody finding a co-founder.
I tend to agree. Swani, do you want to jump in with this? Because you've hired a lot of people, but not necessarily at the co-founder level, right?
Well, I did have a small short-run startup in the US. And I think I don't think I can add anything to what Sumit and Padan have said, but I'll take a slightly different spin on the question. If the intent of asking this question is like, is it like, try to identify the intent, right? Is it based on, hey, I'm not confident if I can run things on my own. So maybe then look for a mentor or a coach or somebody who can, start hand-holding you up to a point and, help you learn the tricks and tips of the world, right? So I think look at it from that standpoint. Ideally, if they don't have a co-founder, maybe look at it like, hey, you're not sharing any more equity, right? So go solo and enjoy that. I think if it's more from the framework of I need additional help and support, then maybe think about sharing your idea, in whichever way you are able to, without spilling out all the secret sauce, with a couple of your friends. See who's getting passionate, who do you trust. Maybe start by sourcing some small chunks of help, and whoever is willing to go in the whole swing, maybe you have to do a lot of evaluation, and I think somebody put in transparency and trust are very important and vital, and Sumit said you spend a whole lot of time, right? So if that is a person, then maybe over time you will feel it, know it. So hopefully that helps some of the background to the question, if that was even related.
No, absolutely does.
Yeah,
and
just
then,
to add a bit, Steve,
please.
if I could. Yeah. So I just like,
Please.
so while I agree that while I know that it's not like you can go and find a co-founder, but it's very, you can make your founding team feel like they are co-founders by, empowering them and by giving them substantial amount of equity so that they feel ownership in the company. And I think that is the next best step to, if you have the lack of a co-founder in a certain area, then building a founding team and really empowering them ownership-wise, aligning with what they want. And, equity really makes a person feel that they are part of that journey, right? So that's one way you could kind of bridge the co-founder gap.
Yeah, and I think that's something, around here we take for granted. I joke, but it's true. I said everyone in Silicon Valley has a neighbor that they think they're smarter than, but that neighbor is a millionaire because they joined like Facebook or Apple or Google, as an engineer 20 years ago and now has this big house, right? And they're like, whoa, well, if he can do it, I can do it, right? So everyone here values equity. And I think ecosystems, it takes time to value that equity. And I think that's, starting my first couple startups in New York City, they didn't necessarily value the equity. They wanted the high salary because they could have went to go work in a bank or something, right? So it seems like in India, people are starting to value equity at this point, finally, or
yeah. I mean, they have started, right? If you look at, even in Bangalore, if you look at it, just the fact that Flipkart, after so many years, got acquired by Walmart, was a big deal for the overall ecosystem, because you had so many people coming out where the ESOPs were valued. There were so many coming out that, invested and started angel investment. And just overall, it lent a lot of publicity to the fact that startups can do equity well. And ESOPs are valuable. I think the previous watershed event that happened like this was when Infosys went public, right? So that was not really a startup from what we think of today, but it started out as a small company, it became a large services company. And then a lot of employees made money when the stock actually listed. I think the Flipkart has been, like in the startup world, has been a similar kind of watershed event for us here.
Yeah, I've always made the argument that that's what it takes, right? For an ecosystem to start developing is for people to understand the value of equity, right? And it usually takes a big exit, right? And then those folks also become investors themselves, and then those other people want to start working at companies that are very similar.
Yeah, I want to echo Patan's sentiment. I think when we, like any other organization, have the windfall gains, we have seen the teams really think, how it comes together, because we offer equity as well, so options. So I think from that standpoint, we can see that cohesive gel of thinking, and for the organizational, even at the strategic level. So I think that definitely adds a lot of value from that standpoint.
Mm-hmm. And taking this kind of one step a little further is when you're recruiting. So let me tell you a very fast story. Fresco, I'm on the board of one of our companies, and I was just talking to the founder the other day. They had some big issues with their rollout, and he asked at very short notice his team to work over the weekend, and the customer success team. And there was so much pushback and complaining, and he would call me. He goes, "What do I do? Like, they're not startup people." Right. And I said, well, you have to start, it's your job now as a leader. Like, you hired, unfortunately, you probably hired people that you thought were startup people that, quote, were startup people and weren't. Now it's your job as a leader to go get them comfortable with that. But you also have to then respect the fact that it's going to be a transition. Right. And then the good news for him is he should be able to help them with that transition, and he should also be able to augment with future hires, lots of more, startup people. Right. How is that in your, what I call second level, right? Like, you have your founding team, not necessarily co-founders, but that first core team. When you start expanding and hiring that next level of people, what's the environment like in India? Still for fairly early stage startups to go attract that second level of talent that understand how startups work. I think Sumit, I see you went off mute, so I'll let you go first as well. But I think you hit the nail on the head. And you said, like, don't come to the startup immediately for the money, right? Because you're not going to be able to match what, Infosys is paying or someone else, right?
Yeah. No, I think, if I think your early network actually helps you get the first few people who will work with you, right? And I can tell you that I actually hired my engineering manager because of Fresco. So one of the, and this example is that Titus, who is my managing partner, who did the deal for us. Fresco had invested in a company called education startup in the US, and it had got acquired. And this gentleman was actually coming back to India. And, we interviewed him. Fresco made the connection. We interviewed him. He understood what does it mean to work in a startup, first of all, right? And what does it mean to have an equity in a startup, right? And ultimately, that it has to be a hands-on approach, even though he was leading the engineering function in this education company. But ultimately, he knew that it has to be fairly hands-on. He can't just come in, create a team and then essentially guide it from the top. That's not how startups function. So I think your early references really work a lot of magic, where your network, and if you reach out to the right set of people within your network, they actually point you to the right set of people who could potentially become your early founding set, or your second level of founding team. And obviously, then it's once you have made that connect, ultimately you need to give out that magic to these people. You need to be able to convince them why is it, how can they benefit from this entire story, and what is it that they are going to create as part of what your vision is. And I think that conversation is very important. I remember some of my initial hires. I think first 50 hires that we had at Fable, I actually ended up interviewing about, I think, 49 of them. Probably there was just one who I did not interview, probably because of lack of time or I was not available. But about 49 interviews I took, and all of the interviews ended up being 3.5 hours each. And it was not about that I was interviewing them. It was more like a conversation, that what we are trying to do over here and how they can contribute. And I think that you cannot do it like a 45-minute interview or a 1-hour interview. It has to be a free flowing conversation from both ends, where you are trying to understand what's the complexity that the other person has. Are they facing some real life challenges where they might not be able to accept below a certain threshold of money? How do we kind of bridge that gap to where he or she is comfortable, versus but not that we are not making them millionaires at the start. So all of these conversations need to be done, and pretty transparently. You need to be quite upfront that, dude, I can't pay this much, right? This is what you are in it for. If you are in it, then this is what can be done. And I think that those kind of transparent Q&A or a discussion really helps hiring the first set of people. And they really need to be aligned with you, because if they are not aligned, essentially you are not building anything. Nothing will go out, no product will be made, no consumers will come, no users will come, or whatever you are trying to do, nothing will happen. So I think spending that time is very, very important. Building your first 5, 7, 10 member team is very, very important. And largely it comes from network. It rarely comes from trying to put hiring companies or recruitment companies help you recruit, because you will not find it in the recruitment network from recruitment agencies.
Okay, continue, please.
Yeah. I just want to add to that. Definitely agree with what Sumit said. And adding to that, I think beyond that stage also, like for example, even we are 6 years in, we don't want to leave that startup mindset, because it's been super beneficial for every rifts and tides. And I think until there's a big critical threshold, so I think everybody has to have that startup mindset. Even for large organizations, I think that should be there, like having a startup mindset, that ownership, sense of responsibility, not being in for the money, right? Something more, right? Money is important, but there's something more to it as well. So that has to be there. I mean, 20, 40, 50, I mean, unless the recruitment team is feeling, hey, we are all good to go, I think we should have that for the long term. So I think scaling from that 7 to 50 and 50 to 100, that mindset should definitely not go away. And I think that's an important quality, to have an asset, which plays out really well. So I think for scale, if there's a problem, then continue to hire the startup mindset people.
Yeah, I couldn't agree more with what both of them have said. I think that, when we look at compensation, money is not the only form of compensation. Is something that needs to be really figured out with the candidates that are trying to pull in, and really compensation is a form of respect that you give the person, right? So the idea is you respect their skills, you respect their ability to come and join you, you respect the fact that they'll be able to build a good team, and they will add value to you and you add value to them as an organization, right? And that is the story really that you have to lay out. First, 40-50, just like Sumit mentioned, right? It's a very founder-driven reference and network kind of build that you have to do. You really can't do anything else. And I would say like after 50-75, you should sell the company and not get into the next problem, right? So that's one way of looking at how to scale beyond that. But the first 50-75 is, very, very founder and reference focused within your network. And it gets easier after the first 15, right? Because the excitement that you can impart to the first 15 is what they communicate to their network and pull people in.
Yeah, and then you're a little more established too. It's a little less risky.
Right. Culture is underrated as a compensation tool. The difference that a startup culture has. Empowerment is underrated as a tool because young engineers really like to build stuff that goes out and does impact in the world. There are a bunch of things beyond money that we underestimate as pulls for someone. Of course, there's like a base amount that you can't go below, but beyond that, options to show, it could be opportunities to talk to customers at a young age of your career. All of those are very interesting for people to figure out, right? So they're all on the table, really.
Okay, we're going to start bringing in some of the questions from the audience, and then also one logistical note. We still got some little time left, but being in the morning in here, my family's going to start. I'm going to switch location, so I'm going to mute for a second, but I'm going to ask the question first. So it's not that I've gone away. I'm going to just change locations in the house. Conferences under COVID, right? So thinking you've been talking about compensation for equity. I'd like to hear your guys' opinion on specifically how you think equity can be distributed amongst that early founding team, and even like your ESOP and your for those in the audience, your employee stock option plan, right? Your ESOP, moving forward, how easy is it to do here in India, but also at the same time, like what type of numbers could somebody even expect if they're joining a company that's early stage or well established? And as you guys are talking, I will move. So Girish, you might have to do some moderating just in case for like 60 seconds.
Oh yeah, no problem. So go ahead, please. Yeah.
I would say that if you are starting with a founding team and you have figured out who you guys are aligned on what really needs to be done, and my thought process could be very different from Patan and Ashwini, but my thought process is that you shouldn't be too greedy about how much equity you have, right? And I think it's very important that you recognize what the other person brings to the table, and essentially make sure that they are equal partners or made feel that they are respected for what they are coming in for. I've seen a lot of founding teams saying that one of the key founders is 95% equity and the other founder is 5% equity. I'm not sure how those founding teams, founders really go beyond and try to build bigger companies, because I've not really seen a lot of cases where such companies have gone bigger. Because ultimately, at some point, once, let's say, investors come in, if the second or the third co-founder are feeling that they are too small in the company to be able to contribute, then because liquidation will happen to your equity and you're too small to contribute, the intent and purpose of having a founding team will ultimately get lost away. So, I've also seen that a lot of times founders come and say, we are putting money, so we are the dominant founder, and hence I would take 80 or 90% of the equity. No, you might be bringing cash to the table, but probably the skill is entirely someone else's. And one of the mistakes that also happen in India a lot is that you only bring in a founder for their skill and not for their money. I think it is important that, at least in India, is that the initial capital, whatever is required, founding teams contribute, right? And they may not contribute equally, but founding teams need to contribute to that initial capital required. It actually shows skin in the game, and what you're potentially going to build as a vision, which is a combined vision, not one person's vision. That is very, very important. And one of the things that I will recommend to everyone is, which we did not do, but I would recommend to everyone in the future, and obviously we paid the price for it, so it's hard learned lesson, is that even if you are starting out with a 50-50, or a, if 3 founders are there or 4 founders are there, whatever be the ratio, right, or whatever you have decided, do break it down into 3-year or 4-year distribution of your equity, which means that if you are holding 50% equity in the in your company, essentially every year will help you get 12.5%. Do break it out, because you always have situations where some of the early founders may leave the company, right? Because at some point the vision doesn't align, or the teams break up. And in such a scenario, you should have the ability to bring in someone else to replace the founder. So it's very, very important that you kind of break it out. And if you are doing that, at your end, then you would not find yourself in trouble that I've given too much equity to someone, but ultimately they have not worked out. I think that's one of the biggest fears for people. And the way to counter it is by, tranching out the equity based on the, number of years someone has spent.
Yeah, I mean, basically be generous with the equity when it comes to the founding team and key members. Build out a vesting plan, just like Sumit mentioned, and protect equity when you are going VC rounds. That's really the methodology there.
Yeah, that makes sense. I have this conversation. It's interesting that the our conversation today has kind of shifted in this, talent and equity, because that it seems to dominate the conversations I have with the companies after we invest. We seem to, the struggle to hire the right talent and grow the team. The founders always seem, when we make an investment as a VC, the founders are the domain experts. I don't need to teach you about your market. Like I wouldn't be investing in your company if you weren't a domain expert, and our founders, tend to be expert business operators, right? Or they, again, wouldn't be founders. Where they struggle is growing the team and then figuring out co-founder disputes and equity disputes, things like that. We have Ashwan, I don't know if you want to jump in before I have one last question that's kind of amalgamated from the audience around all that.
No, I think all the right answers have been said. So
cool. Yeah. There's 1 or 2 other questions. In kind of to summarize, as this will be our penultimate question, because then I have a fun question at the end, and you probably know what it is if you saw the last session. It would be something like that, a COVID question. But here in Silicon Valley, and this actually kind of gleaned from questions from the audience, but I'm merging it in with it. I think is, there was this notion a couple of years ago, if you were like hanging out at startup conferences, and even VCs and everyone else would say this, like, your ideal founding team at an early stage was, I cringe even hearing this, a hacker, the hipster, right, and the hustler, right? So like theoretically that would be like, a developer, a biz dev person, and like and a salesperson, and a developer and like a designer-y hipster and a salesperson. Like, I don't know how true that is, but like that was for a few years, that's what people were saying. I don't necessarily agree. Sumit kind of threw out when we started down this thread, every founder should code, right, kind of thing. As our last kind of technical question, right, before we start wrapping up, is what do you feel, from a talent perspective, is, what should your early team, not necessarily founder, right, your first handful of people, what should they be in a startup? And then, what do you prioritize after that?
Yeah, I mean, it depends on the kind of startup you're trying to build, right? So I completely agree with Sumit. If it's a tech-based startup, you need someone in the founding team who can own the technology going ahead, right? It could be a financial startup. You got to talk to a lot of banks, build up relationships with the fintechs. Then you need your founding team needs to have that, right? So I don't necessarily. I mean, the one designer, one tech, and one business pattern. I don't think that's really important. You have co-founders. You need to have complementary skills with your co-founder, right? It could be anything, but if you have complementary skills and complementary interests, maybe, then that works out very well. Doesn't have them. You can always go and find the tech part of the founding team or the business part of the founding team, right? Like in Walnut, me and my co-founder, we are more tech than business, right? So we went and built out a business team. Whereas the company which acquired us, both the co-founders are business people, right? And it's a finance lending company with a lot of technology, but they built a technology team, right? And now kind of all 4 of us are complementary in that sense. So I think it depends. Yeah. It's a cliched answer, but it really depends in this case.
I actually think it's a pretty good answer.
It's a good answer. Yeah.
It's the truth. How about that? It's cliche, but sometimes cliches are true. At least in my opinion.
I think some time back, Patan had mentioned that, one of the incentives for a lot of the younger talent is now that they're able to do a lot of projects, where in other organizations, they may not be meeting the client or taking on some large scale projects and all. I think similar to that, piggyback on that notion, right? I mean, this role should be, anybody in the founding team or even the first 1 or 2 levels of first 10 employees, they should be willing to do everything. Like they are the HR, they are the legal, they are the tech, they are everything, right? So wherever the need is there, they should be able to jump in, solve fires and wanting to be able to, solve it. And that's going to be really helpful as the organization is growing and they want to grow with the organization. That's one incentive that people also have, that, hey, I want to grow with the startup because that'll be a faster path to progress. So unless they learn a multitude of skills, and by doing those projects, I think it's going to be challenging if they're not willing to get their hands dirty in anything, like make tea, because for the 10 people employed. So yeah, go ahead.
Yeah, and before we give Sumit the last word on this, since we have to wrap up in a second, I do want to interject and agree very strongly with Ashwani, is because you hit on one of a very emotional point for me. Is I argue in the early stage when you're 2-3 people, you should even have titles. Your title should be co-founder or just startup person, on your business card if you have one, or on LinkedIn, right? Working at startup. Only start thinking of titles after you have 10 people, kind of a thing. And even there, the title should be pretty loose because you have to do everything, right? And if you remember before, we were talking about the startup person and Sumit was going about this, then I told the story is, the way you figure out, I'm assuming what came in those 3-hour conversations, Sumit, and I'm gonna hand it over to you in a second, is figuring that out. Is this person dynamic enough? Can this person adapt? Will they, I don't want to hire someone just to do accounting. I want to hire someone that's going to do 10 other things, right? Kind of a thing. So Sumit, I'll give you the last word on this topic, and then I'll ask one fun question, then we'll wrap up.
Yeah. So my thing is very similar to what Stephen and Ashwini and Patan have said, is that it's the you need to have complementary skills. That's quite important. But at the same time, if you do have some skills, if you don't have some skills, you don't need to go and find a founder who has that skill. You can potentially build that skill, within one of the co-founders, or you can find that skill in your early founding team. So that's something you can definitely do. So don't think, I don't advise anyone to think that we both are techies. What should we be doing once we have built the technology? Who will go and sell? I think it is important that you go and sell it initially, because you will otherwise never find out that the great tech that you have built, quote unquote, is actually going to work for any user or not. So it's important that you have to do that job. You have to go and sell to the first few customers, and you have to find out from them. So it's very important that you build some skills, even if you don't have, over a period of time, because they are only going to help you understand what really it takes and what do you need to get in someone, who you are hiring. So what traits are you really looking for? Unless you do it yourself, you would never be able to hire or give the right kind of vision to the incoming person.
Yeah, I mean, that vision definitely comes from the example really comes from the executive team flowing down, for sure, right? I make the argument that startup CEOs, back when we had offices, were the ones that had to make sure there was enough toilet paper in the office, right? They had to make sure there was enough, tea in the office, that kind of stuff too, right? So it's not just the glamour of speaking at a conference like this, right? People see the three of you up here and think, the startup, running the startup is very glamorous, but I think, people all said otherwise in some shapes and forms. Before we kind of wrap up the entire event, and I appreciate folks staying up super late. If you've noticed, the sun has come up in my world, so we're in different parts of the world. One last question to the audience, lightning round, is, assuming COVID goes away, pandemic goes away, what's the first thing you want to do? Right, quick, lightning round. We'll start with you, Patan.
Yeah, I do a lot of wildlife and wildlife photography, so I'm going to just go and visit every wildlife reserve in India when that happens. I've been missing it this year a lot.
I'm going to Goa. So I'm going to Goa. I'm just actually closing a funding round. I'm super tired in the last 7-8 months. I'm exhausted. I need to go to a beach. That's my break.
You mean see some nature, not look at it through a screen, Ashwani?
Well, I was recently in Goa, so I can't do that anymore. But I don't restrict myself from that. But I think I would definitely control myself from eating out too much, which is a big.
It can be hard.
Yeah. The other big thing is I think in the recent past I've let go of myself on COVID, but I think I'd definitely love to get back to meeting the team and having lunch with them, because I'm sure all of our organizations, all of the employees, they're like, hey, when do we get together? It was great, productive few months, and that those interactions will help, connecting with partners, friends, family, right? I have a lot of external family we don't meet. So we would love to do some of that too.
Yeah, I feel like everyone I know, my wife included, and my wife's office is only a mile away from our house. And, we feel like it's easy to work from home. Easy. I mean, you just saw what I had to do. Like I had to go upstairs, downstairs, right? That kind of thing. But at the same time, it's the interaction, right? Like we really need for collaborative, for team building. We all want to see each other again. So that makes sense. All right. So with that, we're going to conclude the panel. I'd like to thank all three of you. Virtual clap from everyone. Thank you for your questions. I'm sorry. Thank you for your answers. Thank you to the audience for some of the questions that we used. And then, of course, just thanks for your time. I know it's late. I made a joke, I think, is what else is there to do, during COVID, when I recruited you. But I know you're taking time away from your family, Sumit, and you even mentioned it, right? Like as founders, like this is part of the job, unfortunately. And like I do know you had a choice to spend time with your significant others and all the other things. So I appreciate spending yet one more hour in front of Zoom during COVID. So I thank you again and hope to see you in person at the event next year.
Thank you, everyone. Thanks to you for waking up very early for all of us here with a cup of coffee. And next,
thanks Girish for scheduling a tech check at 3:30 in the morning, Pacific time, which I slept through, even though my phone was buzzing. I slept through that.
So when you're back in Pune, Patan also would love to join us in Rupali for a cup of coffee and then dosa. That's all from here. Thank you so much.
This is very enticing, Girish. Although I live in Bangalore, I think this dosa and coffee thing that you said in the last panel and this one, I think it's very enticing.
I need to send you a picture.
I think if this is happening post-COVID, I will definitely be there for dosa and coffee.
Yeah, I'm
joining you, Sumit. Joining you.
And we will join you in MTR for sure.
On the roads, So now we
Beautiful.
are to get in.
The dose is like this big. I mean, it's seriously like this big. It's an amazing place. And I'll tell you a story is I've been coming to Pune now 15 years. Yeah, easy. Once a year minimum, right? And this last year for this event, Girish and Devendra, the CEO of e-Zest, they take me to this place to get these doses. And they said, this is going to blow your mind. It is the best place. And when you travel, people say that all the time, and they weren't wrong. It was the best place. It blew my mind. And they talked on and on about it. They built it up for months before I came. And then I said to them, I go, guys, I've been coming to Pune for 15 years. This place is 100 years old, and this is the first time you're taking me here. So
we'll figure out more then. All righty. Thank you, everyone. Thanks, Patan, Sumit, and Steve yourself. Thank you so much.
Thanks.
And we hope to see you all soon face to face after the COVID goes. Pray for
us.
Thank you. Bye.
And thanks for the audience for sticking around for 3 hours. I know it's not easy to sit in front of the computer for that long.
Thank you.
Okay, great. See you all next year.